adds he sees robust capex growth in India. Hello and welcome. You've tuned into Business Lunch on this Friday afternoon. I am Nisha Poddar. With me as always is Sonia Shenoy. So Sonia, another day, and today the market needed a little bit of a rest, I think, after the stupendous run that we saw yesterday. But let's take stock of markets at lunch hour. Nifty 50 is marginally in the red at this point, but still holding way above that 24,000 level that it had recently conquered. So 24,280 levels on the flat line with a red bias, and same is the case with Sensex 2, which is losing a little over 200 points. Bank Nifty is the one, and it's taking a toll on the top banking and financial companies, and that's why it's down 1% in trade today, with also profit booking seen in heavyweights like HDFC Bank. But mid caps, that's a spot which is resilient today, and that is really holding the market in good fettle. 0.8% up in the mid-cap universe, and advanced decline ratio because of the broader market participation and buying seen in some of the mid-caps is really keeping the advancing stocks higher than the declining stocks. ONGC PSU company is the top performer on Nifty 50 at this point. Sonia.
Absolutely. So, today is not a bad day. I mean, the headline index may look like it's not doing much, but what we have under our belt is big gains, right? And the market has recovered from the low point. The mid-cap index is well in the green, up almost 500 points. So you may think nothing is happening today, but actually it's turning out to be a really good day of trade. Let's begin Business Lunch by focusing on a CNBC-TV18 exclusive. Sources say that the Mahindra Group and Volkswagen may elevate their partnership to a joint venture. Parikshit is here with all the details. Parikshit, over to you.
Well, this could be big news for the Indian automobile sector. The Mahindra Group and Volkswagen are exploring a joint venture for the India market. What will this entail? Well, this could possibly be about producing and developing electric vehicles for the India market and also global markets. Earlier, for the past several months, VW and also the JSW Group, which has made its entry into the auto sector in India, they were exploring a 50-50 joint venture. We believe that those talks have not moved ahead, and Volkswagen has shown an inclination to go ahead with the Mahindra Group, with whom they had signed a partnership agreement, a strategic partnership agreement and a term sheet in 2022. Now, that was about exploring opportunities in terms of joint projects, also manufacturing electric vehicle cells and other opportunities for the India market. Very recently, VW had signed a supply agreement with the Mahindra Group to supply unified cells and components for electric vehicles, which will support Mahindra's upcoming electric vehicles over the next 4 to 5 years. So the opportunity to collaborate further was always there on paper, and they had been exploring those talks. We now believe that those talks have gathered steam. They are at an advanced stage, and maybe in the coming few months, it's possible that both companies may announce a joint venture. Skoda Group, which handles Volkswagen India's operations here in India, is fully committed to the India market, they say. They are not looking to exit. They are definitely wanting to grow, especially in the electric vehicle segment, and they are evaluating the possibility of growing with the help of a partner. And that is where these talks become very important. Both the JSW Group and the Mahindra Group did not respond to CNBC-TV18's queries, and the Skoda Group said that we continue to evaluate all possibilities for the India market. We are committed to India as a geography for our international expansion as well, and we cannot comment more at this stage.
All right, that's an important piece of source-based information, and we'll stay with the automotive space. Lots happening there. So any moment now, Bajaj Auto is set to launch the world's first CNG bike, and CNBC-TV18 has accessed an exclusive image of the motorcycle, which will be called Freedom 125. In fact, let's go back to Parikshit Luthra, who's joining us with more details on this development. Parikshit, this would be a significant move in the auto industry. How does the industry see it, and what could be the significance?
Well, this could be extremely important. There are at least 6 or 7 geographies that Bajaj Auto is closely looking at which have a significant CNG penetration. Look at India itself. CNG is such a popular fuel. According to ratings agency ICRA, they believe that the CNG penetration in India could increase to 18% by 2027 and it could become the second most popular powertrain in the country. Having said that, this is a big untouched opportunity, so to say, and if it's successful, then it really gives Bajaj Auto the first mover advantage. And you're right, there is no CNG motorcycle in the world. Bajaj Auto will be the first, and it also gives them an opportunity to further increase their export footprint. Currently, you have an entire ICE portfolio that Bajaj Auto and other OEMs to India export. There are EVs which are exported as well. CNG would give Bajaj Auto an extra segment to export globally to 5 to 6 key markets and maybe more depending on the CNG penetration. But for India, definitely it is a compelling proposition for the consumer because it will bring down the average fuel cost and the running cost for him as well. And CNG is something that everyone is well aware of. There is no range anxiety that you would have with EV. Where do you charge? How do you keep? How will it perform in the rains? So you know that CNG has been in the country for many years. There is a good enough CNG penetration. The government has a plan of expanding the CNG fuel pumps very aggressively by 2030. So in terms of noises, CNG as an ecosystem is all set to stay. It will only grow further. The penetration of CNG three-wheelers, buses will grow, and possibly the two-wheeler segment could also grow as well. Currently, there are no CNG two-wheeler sales in the Vahan data. So therefore, there is any growth that the Bajaj Auto Group sees over here will only be good for the company and the auto industry altogether.
Okay, the world's first CNG bike, the Freedom 125, going to be launched today. So big day for the auto sector. But let's focus on some more buzzing stocks now. HDFC Bank declines on the back of its Q1 FY25 business update. Abhishek is here to give us more details on all of that. Abhishek, over to you.
Well, to begin with, HDFC Bank came out with its Q1 FY25 provisional business update, which showed that, CASA momentum has been weak for the bank, but it's seasonal in nature and slightly ahead of seasonal as well with respect to one-offs that they have had in Q1 FY25. The LCR has improved. That's a key highlight point. And the credit deposit ratio that continues to decline, which is a good sign for them as well. Deposits are down 0.03% sequentially. Now, system-based, if you see, the whole deposit of the banking sector has declined by 1.65% from March numbers to 14th of June that they have put out as per RBI data. Now, CASA momentum is bleak. CASA has declined by 5% quarter-on-quarter in Q1 FY25. It had declined by 2.75% in the same quarter last year. However, this time around, we have seen sweep-in, sweep-out facilities and, general elections also playing out, which had weighed on the current account deposits of the bank. So CASA ratio as a resultant has declined by 190 basis points on a sequential basis. Advances growth were at 0.8%. It was down 0.8% quarter on quarter, and this was largely due to the fact that other wholesale advances that's declined by 26,600 crore as the management continues to go cautious where the yield is not favorable. Credit deposit ratio does decline to 104.5% versus 105.4% in the previous quarter. Now, the key positive from here is the LCR or the liquidity coverage ratio, which has improved to 123% versus 115% in the previous quarter. Brokerages do say that deposit accretion was weaker than expected. High rundown in current account deposit was not factored in by them. Credit deposit ratio was flat sequentially. So, Nomura has a neutral rating with the lowest target price at 1,660 per share. Other analysts are bullish on the stock, and the target price ranges from as low as 1,725 per share to as high as 2,100 per share. Back to you.
All right, and that is Abhishek having an impact on the stock today with HDFC Bank really losing ground. But on the other hand, remember, Shilpa Medicare rallies in trade. One of the company's CDMO customers reported the positive results from the clinical trials of a new molecule for potential treatment of a chronic kidney disease. Vivek is here to get us all the details. Tell us, Vivek.
Well, good afternoon. So Shilpa Medicare, clearly, the stock of the day in terms of the kind of impact that the stock has seen, up almost 15%. Now, what's actually happened last evening, the company told the exchanges that one of the customers of the company for which Shilpa Medicare provides CDMO services has gone ahead and reported positive results from a pivotal clinical trial of OLC. What is OLC? OLC basically is used to treat side effects for patients suffering from chronic kidney diseases. Now, when you're talking about, the client, still the name of the client is Unisive Therapeutics. Unisive Therapeutics, takes and acquires CDMO services from Shilpa Medicare. The company will also conduct development and supply of APIs to finished dosage forms. So Shilpa Medicare, is an end-to-end supplier both of APIs, finished dosage forms, as well as entire CDMO services. Unisive also has gone ahead and said that they will be placing a binding purchase order for supply of OLC tablets by June 30th, 2025. Along with that, additional tablets will be done for delivery between December 31st, 2025 and June 30th, 2026. So number one, Shilpa Medicare will get money for all of the services for supply of tablets. And along with that, there is also a milestone payment that Shilpa Medicare will receive of close to $10 million. This spans over filing, approval, as well as launch of the product. Significant developments for Shilpa Medicare. On the back of that, like we mentioned, stock up over 15%.
Okay, thanks a lot for that, Vivek. Let's slip into a short break. Then when we return, it's a landslide victory for Keir Starmer's Labour Party in UK. We'll get you all the updates on the other side. Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on Dalal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter-century of excellence.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC.
Welcome back. You're watching Business Lunch on CNBC TV18. Well, it's a huge win for the Labour Party in the UK. While it is a historic loss for the Conservatives, Keir Starmer is all set to become Britain's Prime Minister, ending 14 years of the Tories' rule. Sanjay Suri is here to give us a rundown of what comes next.
We had been expecting defeat for the Conservatives in this election, then expecting crushing defeat, then a Labour landslide. What we are witnessing is really a political bloodbath where the Conservatives stand decimated politically. Labour will form government now with an overwhelming majority with Sir Keir Starmer as the new Prime Minister of Britain. Rishi Sunak has conceded defeat. How could he not? And he's congratulated Labour on their massive win, congratulated Starmer. But Rishi Sunak is now done for. He will have to quit as leader of the Conservative Party. The Tories are very unforgiving of leaders who lead the party to defeat, and then a defeat such as this. Rishi Sunak's high-flying political career really is over. He will at best now be a backbench opposition MP. A very large number of top Conservatives have lost their seats, not forgetting the many who chose not to contest at all, seeing this coming. But over now to Starmer. Starmer has been an effective and innovative administrator with extensive experience in running institutions that Sunak did not quite have. The biggest challenge, of course, will be to steady the economy and to improve the economy, get growth. It won't be easy. Growth has been elusive. He'll have to contain inflation, manage the tax burden. The ask is huge, but the British have decided that they will now rely on Starmer and his team for the job.
All right, so that was Sanjay Suri reporting straight from London about the UK election results and the way forward for the new administration. Now, Labour Party leader Keir Starmer spoke to his supporters and assured Brits about restoring the ideals that hold Britain together, while outgoing Prime Minister congratulated the Labour Party and also took responsibility of the defeat that he has just suffered.
Mandate like this comes with a great responsibility. Our task is nothing less than renewing the ideas that hold this country together. National renewal. Whoever you are, wherever you started in life, if you work hard, if you play by the rules, this country should give you a fair chance to get on. It should always respect your contribution, and we have to restore that.
The Labour Party has won this general election, and I have called Sir Keir Starmer to congratulate him on his victory. Today, power will change hands in a peaceful and orderly manner, with goodwill on all sides. That is something that should give us all confidence in our country's stability and future. The British people have delivered a sobering verdict tonight. There is much to learn and reflect on, and I take responsibility for the loss. To the many good, hard-working Conservative candidates who lost tonight, despite their tireless efforts, their local records of delivery, and their dedication to their communities, I am sorry.
Well, Paul Kelly, a professor of political theory at the London School of Economics, spoke to Sanjay Suri about Rishi Sunak's future as Conservative Party leader and his role in UK's politics. Take a look.
He said he won't resign from Parliament quickly, so I suspect he will continue to lead the Conservatives until a leadership election comes about. But it's not strictly his choice, so he may want to do that for reasons of stability, but it will really be what happens with the rest of the party. And if there is hostility or anger at the way he's conducted the campaign, which I think there will be, he may go rather sooner than not.
All right, so that was all about the UK elections. With that, we'll slip into a short breather on Business Lunch, but don't go anywhere. We'll be just back with all the news updates and market action on the other side. Stay tuned.
Now streaming live 24/7 on YouTube.
Welcome back. You're watching Business Lunch. A quick look at the market in the last 15-20 minutes of trade. It has lost more ground and considerably. For Nifty 50, it has lost more than 50 points, and Sensex has lost now around 340 points in trade. Now, Bank Nifty has also led the charge in terms of the downward movement, over 1% down in trade right now. So keep an eye out on some of the losers. Some of the losers have been the top, Nifty performer. ONGC has seen some profit booking, and apart from that, some of the banks like IndusInd Bank, Kotak Mahindra Bank, Axis Bank, all of them have lost some ground. So keep an eye out on the market. It is showing a faster pace of downward movement at this point. Now, moving on then, market regulator SEBI earlier this week had directed the exchanges to mitigate and to also migrate to uniform pricing, and NSE MD as well as CEO Ashish Kumar Chauhan says that any change in regulation will not have any significant impact on the investors, and adds that they will remain vigilant and also continue to ensure that the integrity and the transparency of the market is maintained. Listen in.
In fact, exchanges have not been told to increase the fees. Okay. It is the framework which is saying that you don't have to charge on a slab basis, which was a discounted framework. You can charge on an equal basis to everyone. Whatever the case, once the regulators regulations have been formed and issued, we'll have to abide by that. And broadly speaking, the transaction charges of exchanges are amongst the lowest part of the overall transaction cost which anyone pays, which would be for the investor. It's not that significant vis-a-vis what other charges they pay in terms of STT or brokerages and other things. So broadly speaking, this is not that much of an issue for the investors. It will have impact. Naturally, any regulations will have its own impact, but on the investor side, it's not even a significant, statistically significant number. There are going to be many companies which will come out of the list once that regulation is actually implemented, and also many companies which will come into the list, because last few years there has not been any change in the list of companies that have come into FNO or gone out of FNO. And the reason is basically there are many companies over a period have become illiquid, and there are many other companies which are not in the FNO list have become liquid. So that's basically the purpose. And once you apply the new regulations, you will see that difference. Naturally, we are continuously vigilant. That is our job. And we need to continue to ensure that the market, the integrity, fairness, transparency, efficiency is maintained continually by all exchanges.
Well, as we wrap up with this edition of Business Lunch, we leave you with visuals from the T20 World Champs as they were greeted by large crowds in Mumbai. Have a good afternoon. Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me is Vivek Iyer. Well, just a while back, we were talking about that recovery on the Nifty that has been sold into. The mid-caps, they continue to do well. Banks continue to be under pressure, and a lot of updates coming in for Q1.
Especially from the BFSI space, right? You know, it's the large cap lenders, you know, it's the mid cap lenders, the PSU lenders, all of them, you know, in the last 48 hours have come in and given the operational update as far as Q1 is concerned. Like you mentioned, the mid cap index is one that's actually outperforming the the benchmark indices. But quite a lot lined up on this particular show. Let's start off with the top headlines. Frontline stocks take a leg down after their heady run, even as mid-caps buck the trend. Pharma, healthcare, along with oil and gas eke out some gains, but financials and banks retreat.
Shilpa Medicare surges after reporting positive results from clinical trial of a new molecule for potential treatment of a chronic kidney disease, stock up over 15%.
Raymond surges in trade after the board approves the demerger of the realty business. Shareholders to get one share of the realty business for every share held in Raymond.
Rail stocks like Ircon and RVNL climb after Ircon, as a part of joint venture, gets a 750 crore rupee order to install broad gauge ballastless track in Uttarakhand from RVNL. Okay, all right, it's a day for the broader markets. The Nifty is down 40 points. At a point in time, we were down just 20, very close to recovering in the green, but that has been sold into for now. What is doing well and continues to do well is the mid-cap space. So that index is an outperform and a how. 0.7%. There has been a massive recovery from the opening lows as well on the mid-caps. What's putting pressure on the markets? Of course, it's the banking index. That's courtesy HDFC Bank yet again. Yesterday, that stock was under pressure. That continues to be the case today as well. And we do have a lot of updates from the broader markets. RBL Bank, Punjab National Bank, all of them reacting to their BFSI updates. Just getting it from Dhanlakshmi Bank as well. The stock is holding up in the green. Advances are up both on a YY and on a quarter-on-quarter basis. And in terms of deposits, they have also grown both on a YY and on a quarter-on-quarter basis. But that continues to be the way, right? And we do have earnings coming up next week. So that is something which will impact the markets.
Right. In fact, if you're looking at PSU banks, Dhanlakshmi Bank, PNB Bank, both of them have actually showed much better traction in deposits compared to what some of the private lenders have shown. But this is our special segment, Mid-Cap Movers. Hormaz is standing at the wall to take us through the mid-caps that are moving around in the session.
Well, the mid-caps and the broader markets have chosen to come back with a vengeance after the last week or 10 days were dominated by the large caps. And you can see that in the moves as well that you're seeing in individual stocks when it comes to the broader markets. And some of the top gainers in the space there, Raymond, after the news flow that came in last evening, 12% higher. At one point was up almost 17-18%. Chinese Tech is up 7.5%. CG Power is doing well, almost at 800 now. It's 6% higher there as well. And Vardhaman Textile is having a good day today, another 8.5%, almost at the day's high. Defense stocks continue to surge. They've been in the news over the last week, month, fortnight, whatever timeline you'd want to call it. BEML is up 11%, Data Patterns, BEL. Masgao Dock has had a very choppy day today. At one point was up 6%, then turned negative, and then again has recovered those losses. But Cochin Shipyard is in a league of its own, 4.5% higher there as well. The stock is up 300% this year already. Railway stocks are continuing to be doing well. RVNL, after that order, the contract that they signed with the DMRC, 17% higher there. Ircon is up 10%. IRFC is back today after a while now, 7% higher there as well. And Railtel at the day's high, almost all of them at the day's high as of now. Volume buzzers then, some stocks doing well there. Laurus Labs is up for the second day in running, 5% higher today as well, now nearing 500. MTAR Tech as well, along with the defense stocks, and Blue Star is up 6% off the highs of the day, but trading with strong volumes. And lastly, some underperformers in today's session, a few and far in between, but Vedant Fashions, MedPlus and JB Chemicals form a part of that list. Back to you.
Okay, all right. Thank you so much for that list, Hormaz. By the way, Dhanlakshmi Bank, the stock is surging up 4.5% now. The street seems to like quarterly update. The gold loan is up 28% on a YY basis, 11% on a sequential basis. So it has surged to the day's high. There's a sharp spike from the lows of the day as well. So that's Dhanlakshmi Bank for you, Q1 FY25 update liked by the street. Let's welcome Himen Kapadia from KR Chayuxi Securities for a technical check on the markets. Himen, good afternoon. Thank you so much for joining us. Well, we did recover from the opening lows for sure, but Nifty hasn't been able to recover into the green. Do you think this is a level which could be an important level to watch out for? What about the Bank Nifty as well?
A very good afternoon to you, Sonal. Thank you for having me on the show. It was a pleasure. I'll start with the Bank Nifty first, Sonal, because HDFC Bank has turned turtle, so to speak. It's a major reversal flip-flop. 150 points off from the high in just 2 trading sessions. That has spoiled the Bank Nifty movement. And not only that, today we're on the verge of the MACD giving a sell on the daily chart on the Bank Nifty simply because of HDFC Bank. So, and this obviously will take its toll on the Nifty also. We are stretched, we overbought, we're riding on top of a major move from 4th June. Everything is fine, but stocks are doing what they're doing. I think, like you also mentioned, the mid caps, Hormuz mentioned, mid caps have stayed a strong comeback. So I think better to be specific, but if HDFC Bank stages a recovery, that would provide some respite for the Bank Nifty. But otherwise, the picture is getting a bit cloudy as far as the Bank Nifty is concerned. Nifty will be more or less insulated because of one and only Reliance. I think Reliance still has a clear upside left. So I guess it's Bank Nifty looking better than, it's Nifty looking better than the Bank Nifty now. So then.
Thank you so much for that, Himen. Himen, just before I come to you to take your top picks, if you could just have a look at the charts of some of these railway stocks. Have a look at a name like RITES, IRCON, RVNL. The last half hour, all of them have surged to the high point of the session. Himen, first of all, what are your top picks for the today? And do you have any calls on any of the railway PSU stocks? They're doing quite spectacular in the session today.
Hi, Vivek. Yeah, firstly, I'll just run through my calls. I have a buy call on Hindustan Unilever. I had a buy call last week also. The target was hit, and it's a repeat call because looks good. Same logic applies. Oscillators buy, almost rounding bottom. Stock is staging a recovery. A further upside is overcoming the resistance level. So one can buy HUL at around 2525. Stop loss of 2495. Target of 2585. Second stock is Reliance. Reliance gave a 21-week breakout, Vivek, about 3018. Gave a breakout. And after that, we've had a 5 trading session cool off. And now it's getting ready to start the next leg of its up move. So Reliance is a very clear buy. But get my Reliance at 3140. Stop loss of 3090. Target 3240. There is the recent all-time swing high at around 3160, which I believe would get taken on very easily. Now, coming back to the other stocks that you mentioned, Vivek, I think even if we start with the RITES, 6 months of a consolidation phase. So some of these stocks have, in a raging bull market, Vivek, something like a RITES has consolidated, given a time and a price retracement in 6 months, 820 to 560, and now we're back on track. It's going to 950 and more, Vivek, absolutely no doubt. And even the RailTel and many of the stocks that you spoke about, now they're all over the place. But even if you look at RailTel, Vivek, 6 months, 490, low of 300. Now we've given an upward key reversal in the last month, and we're early July, and we're breaking out from there. So many of these stocks are sitting on significant rises, but Vivek, 5-6 months in a market like this, cooling off, giving a time price retracement, not going down much, augurs well for the next round. It's up move. So base has been formed, and despite the move, I believe there is clear upside left in all the stocks that you mentioned, Vivek.
Okay, all right, Himen, thank you so much for joining us and have a great weekend ahead. By the way, those are some comments coming in from Rajiv Bajaj on the launch of world's first CNG motorcycle. He's saying game-changing day for us at Bajaj Auto. The stock is doing well, and of course we are getting some visuals as well. We'll just check if we can cut into this particular conversation right now, but looks like the most important thing, of course, will be pricing of this this particular vehicle. and what are the other features of the bike, what would the mileage be, and other price points as well.
I think Parikshit just told us that it should be in the range between 80 to 90,000. Right? It's going to be a very important day, and he's saying it's a game-changing day. So we'll have to wait and watch. First of all, I want to see how the bike looks, and second, at what price point it comes in at.
And in this case, we could also, of course, because I track the oil and gas space, also watch out for Mahanagar Gas, because it has its exposure in the Maharashtra market, and getting bikes now as a part of their overall portfolio, that just means volume improvement for this company. How much will it be?
Will people,
new market, how much will it be? Will people actually go ahead and buy CNG bikes? That's again a question mark. But yes, of course, this would be a whole new market for Mahanagar Gas as well. So watch out for that stock. It has been doing well of late. We'll see how much of it is already in the price, because the stock has surged, and one of the cheapest stocks in the city gas distribution space as well. Okay, all right, we'll do one thing. We'll keep getting more updates for you on this launch. We'll slip into a short break. When we come back, we'll talk more about the markets and stock-specific action. Stay tuned for that. Welcome back. A lot of pockets in the markets which are doing well, and metal stocks, a whole host of them are gaining in trade today. On the back of multiple news updates, Nigel is here with the analysis. Nigel, what's working for the metal names?
Well, I've got three big pointers. One is, ahead of the jobs report, sometimes there is a speculation that that number is going to be a miss, and the street loves that because then the Fed will go ahead and cut rates. So on the back of that, normally you see the metal stocks go into the event higher, and that's the case here again. So that's point number one. Point number two. There's a report that's come in there, and we haven't verified it by, by any source, but we're just going by the report. What it suggests is that the Steel Federation has recommended a merger to the Steel Ministry. What is the merger? They're recommending that 3 companies get merged with SAIL. Which are the 3 companies? Well, they are talking about RINL, they're talking about FSNL, as well as NMDC Steel. So they're saying all these 3 companies should get merged into SAIL. And they believe that a merger will be better than privatization. We know that the government has been talking about NMDC Steel's privatization, but they say that no, this is a better option. Now let's run you through a few details. What is the rationale that they have given? They say that it will help SAIL go to around the 35 million ton capacity that they have been gunning for by 2030. As of now, SAIL has around 20 million tons, and both these 2 entities, that is NMDC Steel has 3 million tons and RVNL has close to around 7 million tons. So put all of that together, if it merges, then you'll have close to around 30 million tons in a single unit. Centrum Broking, well, they have come out with a note. They say that they believe it's positive. because the capacity goes up by close to 50%, 20 to 30 million ton. They say at peak utilization levels, the EBITDA number can move from around 13,000 crores all the way to around 20,000 crores. And more importantly, if they can do this merger, then it avoids any big capex for sale, which was estimated at around 80,000 to around 1 lakh crores odd. So higher capacity, maybe probability of better EBITDA, and also avoiding any kind of big leverage in the books. Those are the reasons that they have given. Some part of the street though believes that in the near term it will be a bit of a negative, because as of now, both those two assets are struggling in an operational performance. Now moving to the third point, Antique has come out with a note on Nalco, and they have a buy rating, and they've upped the target price a little bit to around 235. They have given three big reasons: pricing, cost saving, and volume push as well. On pricing, they're saying that the LME aluminium prices, well, it's much higher on a sequential basis as well as on a year-on-year basis, close to 11 to around 14%. On the alumina side of things, they're saying the price of alumina in comparison to what it was at the end of the past quarter, that's quarter 4 FY24, it's up by close to around 18%. So pricing is good. Second factor is on the cost side. One of the coal blocks had got commissioned and they were getting 2 million tons. Now the second coal block as well comes on stream, then they'll have 4 million tons. So there'll be cost saving because the power and fuel costs will go down. And the third factor that they've highlighted is that they have been talking about this brownfield expansion of the alumina facility, which could come on stream in the second half of FY26. And also there are talks about expanding the aluminum capacity as well. So that's why Antique is positive on Nalco, pricing, volume growth, and cost saving. Back to you.
Thank you so much, Nigel, for breaking down the entire metal rally for us. The next stock on our radar is Raymond. The stock is surging in the session today as the board has approved the plan for the real estate business demerger. This is our special segment, Mid-Cap Spotlight. Upasana is here with all of the details and the analysis.
Well, the board has approved the plan of demerger of real estate business into its wholly owned subsidiary, that is Raymond Realty Limited, and the company seeks listing for the same. The shareholders to get one Raymond Realty shares for each share held in Raymond Limited. Well, the group has identified three distinct growth drivers, that is Raymond Engineering Business, which is already listed, and Raymond Lifestyle Limited and Raymond Real Estate Business, and the company seeks listing for both of these business verticals. The company believes that the shareholder value creation will be on the cards, as the simplification of the group structure will enhance value through its structural benefits. The bifurcation of these businesses will enable value unlocking of each vertical, and segregation of these business verticals will enable them to move forward independently. Now, looking at FY24 numbers, the lifestyle business grew about 6% in FY24. Real estate coupled with engineering business grew almost 24% in FY24. Now, placing focus on real estate business, the turnover stood at 1,593 crores, which contributed almost 24% of the total turnover of the company as of 31st March 2024. Now, looking at the shareholding of Raymond Realty Limited pre and post the demerger, pre-demerger, the promoter shareholding stands 100%, and after the demerger, the promoter shareholding stands at 45%, while public stands at 51%. Now, taking a brief financial overview, in FY24, the real estate business the revenue saw an uptick of almost 43% on a YoY basis, and margins stood at 22.5% versus 24.8% on a YoY basis. Mind you that the company's con call is scheduled today at 4 p.m, where company will be commenting on its value unlocking and the key rationale behind the demerger of the real estate business, and we'll be closely watching out for that.
All right. Thank you so much, Upasana, for joining us with all those details. A big mover indeed in today's trading session, and we'll get you the updates from the conference call as well. Slip into a short break now. We'll get you more on the markets and stock-specific action on the other side. Stay tuned for that.
Welcome back to Mid-Cap Radar. It's the mid-cap and the small-cap end of the markets that continue to hold the markets higher. But one particular company that we are focusing on today is ixigo. The stock is surging in trade. The travel platform major reported its first quarterly performance since listing. Earlier today, we spoke to the management of the company to discuss the growth outlook going forward. Listen in to what they had to say.
More than the growth, I think what I would like to comment about is the fact that the reason why we have been growing incrementally year over year is because inherently because of the ability to monetize from the large captive user base that we have and the amount of innovations that we have done on the ancillary and value-added services side.
Our strategy will be to incentivize new bookers, spend on performance and brand, and make sure that we capture market share on the flight side and continue growing faster than the market there. Whereas on the train side, overall market is again not growing that fast, right? I mean, there's a single-digit percentage capacity growth. So again, there we are growing much faster than the market. On the bus side, again, it's an under-penetrated market. Less than 20% of bus bookings get done online. And we are the second largest player, but we are also one of the fastest growing ones there. So if we are able to just maintain slightly better growth than the market, I think we should have a right to continue growing this way. But what I would guide is this year, overall market is going to grow slower. Overall OTA market is going to grow slower than it was growing this year for these capacity constraint reasons across flight and train.
Okay, that is about ixigo. Let's also focus on Sheela Foam. The stock is surging in trade. The company expects overall revenue growth for the year to be in the range of 15 to 20%. This surge also came in after the conversation we had with the management, the CMD of the company, that is Rahul Gautam. He spoke about the opportunities in export markets and more. Listen in to excerpt of that conversation.
We are looking at close to 10% as a volume growth and close to about between 10 to 15% as a value growth. Spain is we have a very small market share in a very large European Union market. Though the markets are shrinking and contracting there, but we are continuing to grow. Last year, we did see a drop in the top line, and that was primarily on account of the raw material prices coming down. Consolidation there would really bring about the increase in the bottom line and in the margins. So what was hovering more around 7-8%, we expect that to go up to between 10 and 11%. And that integration has done well, although we are not yet a year away from the transaction. And we are beginning to see those numbers in the bottom line. It's the front end which is taking more time.
Well, some important commentary from Sheela Foam over there. The next company in focus is a stock from the BFSI space. Utkarsh Small Finance Bank slips in trade after reporting its Q1 FY25 business update. Abhishek is here with more details.
Well, to look at the numbers of business update that's been given by Utkarsh Small Finance Bank, again, CASA depletion is one of the highlights that entire banking sector is witnessing. Deposit growth is at 30% YOY and about 4% sequentially. CASA is down by 3.6% quarter on quarter, so the CASA ratio has declined to 19% versus 20.5% in the previous quarter. Retail term deposits, they are up 9.5% on a quarter on quarter basis. And if you take a look, the overall loan growth is also a bit tepid at about 3 to 4% on a sequential basis. Back to you.
Okay, all right. Thank you so much, Abhishek. So that is the word coming, and that is the update coming in from Utkarsh Small Finance Bank. Let's quickly take a look at the markets again before we wrap on Mid-Cap Radar. Nifty is down 50 points now. We have the Bank Nifty, which continues to surf today. It's a 600-point cut on that index for now. The mid-caps continue to do well, so 0.7% higher there. And it has been steady at those levels for last couple of trading sessions itself. So we will keep tracking markets for you. But for now, we'll take your leave on this edition of Mid-Cap Radar. As we count down to the budget, we'll focus on the defense stocks on our special show coming up next. Stay tuned for that conversation.
Israeli offences against Rafah since the 6th of May, over 1 million people have been displaced once again, desperately seeking shelter and safety.
Dr. Sunil, one of the statistics say that only 50% of Indians brush twice a day. Do you think that's simply because of a lack of awareness? Or do you think it's also a cultural issue where, one of the statistics or reports that I was reading indicated that we just don't feel the need to brush more than once a day?
It's not a question of need. It is absolutely required. It's a mandate that you should brush twice a day. In the morning to remove everything that has been lying in your mouth while you're sleeping at night, and the acidogenic bacteria that work on it and create harmful acids, etc., and to generate freshness. And in the evening, of course, to remove all food debris and material.
Hello and welcome to a CNBC-TV18 special. The Ministry of Defence has set a target of achieving a turnover of 1.75 lakh crore rupees in aerospace in defence manufacturing by 2025. They also have a target of achieving 50,000 crore rupees worth of exports by 2029-2030. So how will this be achieved? And what is the budget wish list of India's defence industry and startups as well? Joining us now to talk about this all is Rajendra Bhatia, President of the Society of Indian Defence Manufacturers, Vrinda Kapoor, CEO of Third Eye Tech, Neeraj Gupta, MD of MKU Group, also joining us on the program. Let me begin with Mr. Bhatia first. Mr. Bhatia, give us a sense of what is on top of the industry's wish list for the defence sector for this budget.
Thank you, Prakshit. Thank you for having me on your show. And of course, the wish list, they'll always mange more. But the fact of the matter is that today, if you take a look at what all has happened in the last decade or so, there could be policy measures which have been taken. There are certain initiatives which are being taken afresh. And there's certain, I would say, operationalization of these initiatives, which are the policy directives which have been taken in the past. Let me cover all these in three baskets. The first point is that there are enough policy initiatives which have been taken. They probably need tweaking here and there and some further refinement. But the key point would be to operationalize all this. In fact, if you want a vibrant defense industrial base, which does meet the requirements and to the targets which you laid down, and one more which Raksha Mantri has said some time ago, let me just recount them. First one was reaching a target of 50,000 crores, or what we started at 5 billion plus of exports in the export market. The MOD has now announced that the last year's total defense production in the country was 108,000 crores, out of which approximately 22,000 crores was by the private industry. So keeping these figures in mind, what we are looking at, converting 20,000 crores to 50,000 crores, and 108,000 to in a very near time to 175,000 and later to 300,000 crores as laid down by our Raksha Mantri. Now, if you take a look at these two so-called vision statements which we have put, on the exports front, private industry has actually shown the way. Today, approximately 65% of all the exports is by the private industry. And it is the private industry which is coming forward to export more and more. If we need to get down to 50,000 crores, I think we need to take some corrective measures in terms of having a framework for what we say government-to-government sales. We already hearing of a word being talked about, MOD acquisition for international transfer by India called Maitri coming into force. We need a dedicated desk for defense exports in the Exim Bank, and we need lines of credit to ensure that these exports do take off. On the production side, I think what we really need to is to kickstart the various initiatives which are started. We need many more programs to come up in Make One, which should see the light of the day. We should see strategic partnership giving us a fillip going into the, certain major programs like the, we talked about P75I, which is a submarine program. Programs like these getting a fillip because of what we would say work in progress on strategic partnership and Make One programs in the country. There are many other suggestions, but I would probably revert back to you as we move on in this discussion.
Right. Let me go across to Neeraj Gupta as well. Neeraj Gupta, when we speak about exports, and this is a committee that you lead within the Society of Indian Defence Manufacturers on how to increase the export footprint of India's defence industry. Any specific interventions that you would seek for defence exports, and how do you see the exports increasing in FY25?
First of all, I would like to say that India started with a very, very small base. And if we look at last 6 years of export targets, India has achieved a target of roughly around 21,000 crores, which translates to 32% year-on-year growth. There, I would say few things that have been done right by the government are policy support and reforms, especially on export promotion and liberalizing the licensing or specifying the standard operating procedures for the export licensing, which I can say that today is one of the fastest in the world for India. Then things like IDEX, promoting defense R&D ecosystem, that has been a very welcoming step, and that has also promoted India's defense exports. Third thing, I would say India has really started marketing itself nicely in international exhibitions and fairs and positioning itself well. While going forward, I would say India can utilize defense diplomacy to its advantage today. I would say things like G2G, G2B interactions with friendly foreign countries, and using India's geopolitical situation as of today can be a big leverage for India to enhance and to achieve 50,000 crore exports. Second point I would like to mention here is defense line of credits. This can be a wonderful tool as far as line of credits are concerned to reach to the markets which have not been traditional India's customers, or we can enhance our geopolitical situation by using India's line of credit. And this can be done very effectively. Third, investment in R&D. And I would say fourth, collaboration with academia. Fifth, customized solutions. Every international customer requires some kind of tweaking as far as their local needs are concerned. I think when Indian companies can offer customized solution, will also enhance defense exports. Third, adoption of international quality standards is also something that we should be adopting to, and Indian agencies should be there to offer certifications against them. I think these are few steps that will help us in achieving 50,000 crore exports.
Right. Vrinda, when we speak about the startup ecosystem, and we have seen startups like yours, Third iTech, collaborating with General Atomics under the ISET framework between India and the United States. What more can be done for the startup ecosystem, especially when it comes to deep tech? This has been a focus area of the Ministry of Defense. But if we really want to achieve results, how do we ring fence the sector or give more assurances to the startup ecosystem?
Thanks, Parikshit, and thank you for having me. So, to understand that, we first need to really understand the role that deep tech or critical tech is going to play in the defense ecosystem, right? It's going to be a component. It's going to be a component in a fighter aircraft. It's going to be a component in a missile. It's going to be a component on a gun or an ammunition. So I think one of the points that Mr. Gupta just spoke about, which is better integration of the ecosystem, the large companies and the innovation ecosystem, so to call it, the deep tech ecosystem, is really going to be what wins here. So from the government's perspective, how do we incentivize the large companies to try an untested and an unproven commodity? That's one of the policy reforms that we need to think of. The second is the risk appetite around deep tech itself. I mean, while we're hearing more globally about investments into deep tech, if we really look at the Indian landscape, the first couple of years, the first 5 years of existence, the first 5 years of survival become very critical to deep tech companies. And for that, risk appetite from a government perspective has to be increased. From this budget, what we're really looking forward to is the National Deep Tech Research Fund coming online. Right, because that body of 50,000 crores or 1 lakh crores that is now earmarked for this sector, for the government to place long-term bets in this sector, is really what's going to provide a lot of buoyancy to this sector. So we know that this scheme is coming online. It is going to be the ease of disbursement, the ease of accessibility, as well as the repayment mechanism that we really need to see innovation in from the government's perspective in order to take this forward.
Right. That's an important point. You're hoping that the national deep tech policy comes out soon, and ease of implementation would be key. Let me go back to Mr. Bhatia. Mr. Bhatia, when it comes to the contribution of the private sector in terms of manufacturing, defense manufacturing in the country, give us a sense of the kind of growth that you've seen over the years. And if you were to quantify the value of contracts going to the private sector in the defense ecosystem, what would that be like?
Okay, so if you take a look at the growth in the last 5 years, the share of the private industry actually has gone from 17 or 18% to 22%. This is, I'm talking about the total defense production in the country. But if you take a look a little deeper, maybe on the, the defense ecosystem is based, like Brinda also mentioned, on a tierized structure. You have OEMs, you have tier 1, tier 2, tier 3. When we talk about these production figures, these are production figures of private industry in terms of their being a OEM. Because they have taken direct contracts, and this is how this figure gets captured. Their work which is being done as tier 1 and tier 2, rest of the other places, do not directly get added to this figure. So this figure would be a little higher than the actual percentages which have been mentioned. So gradually we have been increasing overall share of the private industry. In the last 5 years, it has gone from probably 17% to 22%. But if you take a look at exports, exports have been driven by the private industry. And in fact, this year's 21,000 crores exports have practically 65% of the total exports being done by the private industry. So what I'm trying to bring out is that I think private industries come of age. They have started to make a mark in this industry. And today we see a great potential for increasing our production going forward into the future. But what would this require from the government is that we need to be much faster with placing of the orders. What we say, the time for completion of a contract from when the necessity arises to placement of contract today lies anything between 5 to 7 years. I think we need to cut down this time to maybe 2.5, 3 years to ensure that industry is able to see the light at the end of the tunnel in a much shorter time. And they can start investing before time to ensure that they are ready for manufacturing all these products. I would also say that not only this is important for the large industry, this is also very important for the startups.
Right.
Startups tend to start burning their money or putting their money when they see that there is some light at the end of the tunnel, and tunnel is not too long and too deep. It's a short tunnel and they can see light at the end of the tunnel. And that's exactly what really drives them to come forward with great ideas. IDEX is one such example where government committed itself to placing orders in a reasonable time frame. So I think this needs to be brought into the system, and I think we should be able to give much better results going forward.
Right. Neeraj Gupta, if I were to ask you about the need for need for synergies between the defense PSUs and the private sector when it comes to increasing exports. There is a target that the Defense Ministry has to increase exports from 106 countries currently to 135 countries in the next few years. How important is a close collaboration between the private sector and DPSUs for that?
I think this is an important subject. And I would say that today there are many areas where DPSUs are very strong at. Today there are many countries where private sector are very strong at. And I think having the understanding of the customer needs and requirements and the local procedures, process and systems is something that is very, very important for India to achieve its targets of 50,000 crores and to take it at the same speed that we have maintained in the last years. So therefore, I would say that this collaboration is extremely important, and wherever private companies are strong, they should take the lead, and wherever DPSUs are strong, they should take the lead in promoting brand India, and a joint consortium approach can also be brought in, where an entire package through defense of line of credit can be offered to a particular country, thereby enhancing our strategic relationship with the country and also promoting defense exports.
Right, that is an important point. Let me go back to Vrinda Kapoor once again. Vrinda, when it comes to startups like Third iTech and the startup ecosystem generally, where do you see the maximum investments taking place? And when it comes to putting the money there or deploying private capex, what kind of policy clarity are you seeking at this juncture for the long term? Because whatever investment you make will not be for a year or two. You would be making that investment for a 10-year period. So what kind of policy clarity or intervention you're seeking from the government in the budget and also over the next few years?
So thank you for that. I think that's an excellent question. So in March of 24, a couple of months ago, the Defense Acquisition Council cleared a series of reforms for startups, right? Where they talked about interim payment stages, to address working capital issues. They talked about, how do you price an IP as a part of a defense acquisition? They talked about how bank guarantees and issues associated with that end up in the working capital crisis for startups. So the good thing that we're looking at here is because this is a sector where so much focus is being given. The government is really doing everything in consultation with industry. We also saw the setup of the Ministry of Defence's Aditi scheme, where grants up to 25 crores are being given now to startups. Something that was unheard of, in the era before 2019, it was inconceivable. What I think the government, what further requirements are there from the government is to be able to fund innovation that looks like moonshots on day zero. Talking about the DARPA model, right?
Well, big news coming in from the automobile space today, and Bajaj Auto is looking to disrupt the two-wheeler market by launching the world's first CNG bike. Now, the bike, which is named Freedom 125, will have both a fuel and a CNG tank. Now, as you can see visuals there, Road Transport Highways Minister Nitin Gadkari is addressing the media at the launch event. Let's cut across to that.
Transport Minister, because of the new initiative and the good quality and good design, 100% you will get more market in the world on the basis as compared with the diesel, the petrol, because the cost is very less. It is really a success story for Bajaj Auto. Particularly, I am giving thanks to Raju and his team for research and design section is very important. Now, in every business, the research design is very important. The people are quality conscious, and that is the reason the cost is reasonable, good, the fuel saving is there, no pollution is very less, and that is the reason that 100% this will be very popular, not only in India, but in the whole world. And this is your initiative, first time you are taking, first time in the world. That is the reason, as a transport minister and as a good friend of you, I am very much happy about it. I am giving my all best wishes and really pray to God to give you good success in this venture, and also giving thanks to your research team, designing team, your colleagues, because the teamwork is very important. And this type of new invention, the people of India, they are going to select it, but at the same time, it will become more popular in the world. Once again, I'm giving my thanks to all of you. Thank you very much. Namaskar.
Going to remain in your mouth through the night. You clean it up, you rinse it, and then you go to sleep.
Okay, but what happens if you don't? If you can just explain to us what are the risks of not doing so?
So what happens is there's a buildup of what is known as a biofilm on the teeth, and the biofilm contains bacteria, especially bacteria like strep mutans, which is what causes cavities. So, and of course, gum disease has different bacteria, but there is a whole bacterial biofilm that happens in the teeth. So if you don't remove that biofilm, then the bacteria will remain there and they will act on the gums and of course on the teeth. And so the gum disease and the dental caries both will be a factor if you don't remove the biofilm. So it's extremely important, especially at night, because when you've just eaten and then you go to sleep and it has time to act.
Is it more of a rural problem? Is it also as prevalent in the urban population?
So it's, I would assume, looking at the stats, that the rural problem would be slightly more because also availability of, toothbrushes, toothpastes and other oral health aids is much less than in the urban areas. But awareness, and as Sunil said, awareness and knowledge has to be imparted so that people will be more, able to do what they have to do.
The Indian markets have not just grown, they've broken several records in the last 25 years. India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel.
Let me take you through each of these features in detail.
Freedom allows for a more progressive design approach to create something really unique and be the first to do it. Let's have a few glimpses of freedom. It gets a strong, rugged front look, a purposeful and stylish LED headlamp, the dual color scheme featuring vibrant graphics that resonate with the vehicle's dynamic spirit. The second distinctive feature is the innovative tech packaging. Let me play a video for you all that showcases this with the help of a demo bike with transparent body panels. The demo bike has a part of the seat that is cut to show where the CNG tank is actually placed. The Freedom comes equipped with a 125cc horizontal layout engine with a counterbalancer for low vibrations. We can see the CNG lines which are in green and the petrol lines which are orange in color. The world's first CNG motorcycle comes with an integrated packaging of a 2 kg CNG tank and a 2-liter petrol tank, together delivering a range of 330 kilometers. Freedom delivers a 9.5 PS power at 8,000 RPM and a torque of 9.7 Newton meter at 6,000 RPM. We have first-in-class linked rear monoshock suspension with a double rate spring which offers greater stability, improved ride dynamics, and higher comfort. Freedom has a robust design with a trellis frame. The frame acts as a protective cage around the CNG tank, in addition to giving it a very solid and robust look.
In India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage. Great way to celebrate our own 25th year with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter-century of excellence.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBCTV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first.
started off on a pretty positive note, but since then it's been a bit of a reversal from the highs.
The deposits are down 0.03% sequentially.
Then below that, you're looking at 24,056 for the Nifty. 24,240 is where we are at.
Growth is holding steady in 2023, 2024, 2025, around 3.2%.
For the overall business of the company this time around, in the first quarter, there has been a growth of 27%.
For the markets per se, at the index level, we're holding up pretty okay.
Volkswagen has shown an intention to go ahead with the partner, that is Mahindra Group.
Ultimate target is obviously to dilute our share from Siemens Energy down to zero.
The mid caps, they continue to do well. Most important thing, of course, will be pricing of this this particular vehicle.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Okay, that is the day so far, and this Friday seems to be a little tepid. And as we sort of came into the studio, sat down, mic'd up, etc., market's taken a little bit more of a tumble. We were down about 40 points. We were down 80, and we're down about 70, 75 now. So, we'll track things, but in the broader market, there is a lot of momentum on the positive side, a lot of bullishness, and a lot of stocks that we want to really talk about. This is Closing Bell. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant Rima Surubi here, and Nigel is joining us from the newsroom floor. Guys, hi, good afternoon.
Hi, afternoon. When you talk about a 20-30 point news in Closing Bell and you begin that, it's largely been a quiet day, right? Because typically we come out and say, oh, look, in the last 30 minutes as I mic down, there's been a 100-point move. So it's been a sort of a ho-hum day.
Yeah, that's true. And I think the bulk of this week, we spend a disproportionate time discussing one stock, HDFC Bank, and I'm sure we'll do it again today, and we'll tell you why in just a bit.
Well,
Sorry,
go
on.
On the positive side, though, I think the broader markets are still well in the green. So I guess portfolios may not be feeling that impact of what's going on in the headline index. So mid-cap index is well in the green. More number of stocks advancing and declining. Not so bad, I guess.
Absolutely. Okay, so let's kickstart the show with the news that the market right now is nursing losses at the headline level. About 82 points down on the Nifty. And like I was saying, it's, banks once again that you can blame, and largely speaking, HDFC Bank. So whatever excitement we had because of the FPI headroom and MSCI possibly increasing weight, today's a completely different day. And now blame it on the business, blame it on that update, because we saw weakness come in on both on the deposits front and advances. So basically, it's been lackluster. And on the core business, this update tells us that, all is still not well. And therefore, that sell-off is very apparent on HDFC Bank right now. It's not HDFC Bank alone. That's led to a bit of a sell-off on some other banking names that have had a good week so far. ICICI would be a case in point. And then you have some more weakness in an IndusInd thereabout. Some IT stocks actually on the back foot as well. So that explains a bit of the red.
If you had this HDFC Bank outsized impact, if you look at the Nifty Bank. I looked at the Nifty Bank, it's down 1%, 1.25%. That is basically what, some 400-500 point cut. But HDFC Bank, in terms of index point contribution to the Bank Nifty, it's negative almost 900 points, single-handedly. So it's everything else pulling in the other direction, mostly everything else pulling in the other direction on the Nifty Bank. And of course, stocks outside of it, outside of the Bank Nifty index, maybe up as well, maybe down as well. But in the Nifty Bank, it's HDFC Bank. All right, Nifty, in the morning, we had a bit of a cut. It took support at the 40-hourly average, which is 24,150. You check out the day's lowest point. There's a support we put out in the morning as well. It's about 24,160 or so. So we almost got to that hourly average, and then we sort of had a bounce. Mid-cap, small-cap indices, each of them about a 0.75% gain. And if you look at sectors, PSUs, actually it's a strange mix because there is FMCG and pharma, which are as pockets doing very well. And then you've got the Railtel and the Aircon and the, defense names and, whatnot, some New India Assurance, a whole swath of PSUs which are really leading, and you can spot at least 8-10 of them if you just sort the gains by what's going up on volume. So big volume-led gains once again on public sector stocks.
You know, I think the fact that we're getting away with a 0.3% cut on a day when HDFC Bank, with an 11% weightage on the Nifty, is now down 5%, is not so bad as an outcome. Pull up the contribution plate. On the Nifty Bank, as Prashant said, it's a 900-point impact. But on the Nifty itself, HDFC Bank has shaved off close to about 150 points. There you have that number. So single-handedly, it's pulled up, and yet, okay, the markets are, managing to get away with a little bit of a cut. But I think the Bajaj Auto press conference has begun, so let's cut across.
Attractive price of 95,000 rupees. To begin with, Freedom 125 will be immediately available in Maharashtra and Gujarat states, starting with the disc LED variant, followed by the drum variants in a month from now. Freedom will be made available to all other states in the country in a phased manner by early next quarter. Bajaj Auto is the world's most valuable two-wheeler and three-wheeler company. It is possibly the only company which can marry the deep expertise of motorcycles and CNG technology. With Bajaj Freedom, the world's first CNG motorcycle, we have a pioneering innovation for the Indian commuter. We made the motorcycle, now you make history. Thank you. I would now like to invite Mr. Rajiv Bajaj, our Managing Director, Mr. Rakesh Sharma, Executive Director, Bajaj Auto, and Mr. Abrav Joseph, Chetak Technologies Managing Director, to come on the stage for a question and answer session. We are now open for a Q&A session. Thank you.
Rajiv Bajaj, starts with the Q&A. But for the markets per se, we spoke about HDFC Bank. For the week, the Nifty is up 1%, while the mid-cap index is a 2.5% gain. And the large-cap indices are on track to close higher for the 5th straight week in a row. Titan is also another big drag today, apart from HDFC Bank, where Kotak has downgraded the stock to a reduce. And Titan will also be one of the top Nifty losers for the week, with a cut, a significant cut over there. Pharma and CPSE index is, the two spaces which are batting for the bulls. So the Nifty Pharma index up more than 1%, the CPSE index too up 1.5%. And if you just tally the performance for the week, it's a lot of IT. So Infosys, HCL Tech, Wipro make it to the top 5 Nifty gainers for the week, with Infosys up 5.5%. Throw in ONGC, which has had a big up move today with the rise in crude prices, and Sun Pharma in the pharma pack is up 3.5%.
Yeah, absolutely. So you still have the gainers. I mean, if you think it's a dull market, please just look away and look at the PSU screen. IRFC, RVNL, Ircon, BEML. We're talking once again 7%, 8, 9, 10%. So the PSU party really on this Friday. Nigel.
Well, all right, let's get Mitesh Thakkar then. He's back into the conversation. Mitesh, it's a bit of a down day, but as, Prashant, Rima, as well as Surbhi said, it's HDFC Bank on one end and everything else on the other end, because X of HDFC Bank, actually the headline index would look much better. So give us a view on HDFC Bank first, technically, and then you can tell us about the Nifty.
HDFC Bank, made a fresh high and has come back, which is a very strange pattern, but then it's now at the support areas. I think the 1640, 1635, 30 zone, I think it should be the area where the decline should get arrested. Otherwise, I'll get out of the stock and, suggest people to maybe prepare for a bit more of decline. So it's right at the support. Let's see if it reverses from here. I would hope it will. And on the index, I think, the PSUs, I think, have kind of put their hands up today and prevented the Nifty from breaking below 24,150, 24,100 zone. That still remains the preferred buying area. On the stock side, ICICI GI is a buy with a stop at 1840. look for targets of around 1930 here. And IGL after 3-4 days of consolidation could be interesting. So buy this one around 512, 510 zone with stop below 500 for a target of 530.
Okay. Prakash Diwan is now with us. Prakash, what's flashing on the screen is the price point for Bajaj Auto CNG bike, 95,000. You track, you're an auto enthusiast. So tell us, what have you made of the price point? Is it very competitive? Is it going to be disruptive as Bajaj Auto believes it has the potential?
Good afternoon, Rima. So it definitely is something which is not going to be very easy for competition to ignore. It's right there where it makes the capital cost very affordable, while we do know that the running cost is going to be far more competitively placed than any other fuel that you would opt for. What's going to happen is people are going to wait for its versatility in terms of, how does it work across distances, across speed bands. So some of that data is something which everybody would want to know, because there's this general apprehension every time there's a new product in terms of performance. Because you're spending almost a lakh plus, you would not want to kind of, keep changing this acquisition very soon. So from that perspective, the moment the performance metrics are in place, I think it will become fairly disruptive. And probably the company is also looking at testing things out before they probably, make some major changes and launch higher price variants. So very good strategy. I'm sure it will be received well.
Now what, Prakash, I just want to point out, the Hero MotoCorp has suddenly nosedived. This happened immediately when the pricing came out. And this is a bike, which is, I think, getting priced almost exactly at the same level as where some of Hero's entry-level bikes are. I did a quick scan on the internet. So the Hero Extreme 125R, the prices start at 96,806, and Bajaj's bike, let's get the flashes back on. I think 95,000 is the starting price for the Freedom, as it's called as well. So the market impact is immediately visible. Now, Prakash, this is a bigger question, right? Bajaj has always taken pride in being the major player and the market leader in the premium end. 125 plus and then 150 plus is where they've always spoken about, domination. But I remember our last conversation with the Bajaj management, where they were saying they do want to make some inroads in the entry level. So now 125cc, is this a battle that's heating up?
No, absolutely. In fact, it's the most price-sensitive commuter segment that you're talking about, and that's exactly why Hero is responding or reacting negatively, Surabhi, because that's their mainstay bread and butter, apart from the Charisma and allied variants. Bajaj is making inroads. It will be potentially making inroads with the CNG bike in a way which is very broad-based. And remember, unlike electric vehicles, CNG is far more easily available in most tier 2 cities as well in India. And this becomes the go-to option for people who want something which is affordable in terms of operational costs. So if the capital cost remains more or less same as your closest available option, when the operating cost is far, far lower, you probably get the right combination. So I think they should be able to do well. It's just that the performance metrics have to now validate this or endorse that, and the acceleration will happen. The buying acceleration will happen once that is out and that's in place.
Okay.
All right. We'll, Prakash will come to you with more questions in a bit. But our colleague Parikshit now gets us a sneak peek of all the key features of the new bike. So let's watch.
You may think I'm sitting on any normal motorcycle, don't you? Well, this is actually the world's first CNG motorcycle by Bajaj Auto. You don't believe me, do you? Wait a second. Take a look. Here you have a CNG cylinder, and that proves my point that this is the world's first CNG motorcycle. Here you actually have a 1.8 kg cylinder fitted inside a motorcycle. This configuration took a long time. It's taken 2.5 years of hard work by the company and its R&D team to put it together. It's an absolutely new ground-up motorcycle developed from scratch. And with the CNG cylinder, you also get a fuel tank right here. So you've got a 2-liter fuel tank and a 1.8 kg CNG cylinder right here. So that was a preview into Freedom NG04, the latest offering by Bajaj Auto. They hope this will be a big disruptor in the Indian automobile market and abroad. Let's see how the customers receive this vehicle. From Bajaj Auto's R&D and manufacturing facility here in Akudi, Pune, with video journalist Balbir, this is Parikshit Luthra.
All right, well, that is a sneak preview, a quick look at what the new product actually looks like. And it's, you know, the point is, and Surabhi was talking about the comparison with Hero and the Hero stock selling off. The simple thing is that, you know, the competition does not have a product. This is the first ever product this kind. The price point is, of course, one thing in terms of how much it costs. But I think the selling price is essentially going to be the cost of running the vehicle. CNG prices as opposed to a regular sort of, petrol bikes out there. So I think that's going to be a big push, and we'll, I think, hear from Rajiv Bajaj in that Q&A when he'll take questions in a bit from now. But let's address other stuff as well, and we'll come back to Bajaj Auto in a bit. Thermax is something we want to address. The stock is surging in trade on the back of fresh order wins. Vamakshi is here with a quick sort of detailing of this. Vamakshi, over to you.
Well, absolutely. Thermax is trading higher today, and that is because its arm TBWES has received an order worth 513 crores from a leading industrial conglomerate. In fact, they will be setting up a 600 megawatt greenfield energy project in Botswana, Southern Africa, and they will be supplying two 550 TPH CFBC, which stands for circulating fluidized bed combustion boilers, over the next 23 months. Now, keep in mind that this order is the first order that has come through for the company in this quarter itself. This is the first order win announcement that has come through from Thermax, and as of quarter 4, they had reported muted order inflow. They missed their own internal expectations for FY24. Order booking was up only 6.5%, and the order book was up at nearly 4% for the year. But in fact, in the con call itself, the company had said that the order inflow was muted, and this was mainly on account of lack of large orders where the pipeline was showing improvement. H1 FY25 was expected to be better, and the inquiry pipeline, however, they said was materially higher versus when the year began, and they were expecting conversions to start through post the elections. So therefore, this is the first order win that has come through this quarter that the company has announced, and therefore we have Thermax in focus today.
Okay, all right, Vamakshi, thanks a lot for putting that together. Prakash, what do you make of this one? As we speak, actually, when this news piece had come out, the stock was up 2-3%, but right now it's up close to 6%. Your view on the stock?
No, absolutely, Nigel. This order, while in absolute terms may not make such a big difference beyond a few percentage points on the earnings potential, but what it does is it kind of starts opening up a whole new stream of orders that potentially they can do. Remember, Thermax as a company has evolved so much from its original, solutions that it used to do to the new age solution that it is providing. And given the fact that there's so much of talk around power consumption by data centers and all of that, and cooling solutions and things, all of these companies will have a huge opportunity to get into new greenfield revenue streams. This happens to be probably an indicator of that. So that's why the market's liking it. And I believe in terms of capabilities, this is one of the best in breed companies that you would ever have. So if you want to play the thermal management vertical or thermal management sector or segment, if you will, then probably, this happens to be a good, never been overvalued, always trades in a reasonable band. Of course, given recent moves, you might argue against that reasonability, but I would believe this is a stock that will probably do very well in your portfolio from the long run, given the pedigree and the kind of product solutions that it has.
I just want to highlight CG Power as well. You know, Thermax is one. Look at CG. CG Power has been consolidating for a while. I mean, it had a bombastic move, but then for a while it did nothing. Today it's up 7%. I'm not sure if there's any specific news flow here. The last sort of news which came, news in terms of new venture, etc., has been, of course, talk of that OSAT venture, semiconductor OSAT venture, which they're investing into. And there has been some buzz for a while that there is perhaps an acquisition coming in Tube Investments or CG Power. We don't know, but we'll see. But, whether it'll be housed here or there, but in the transformer space. So that's something to watch out for. Otherwise, Cochin Shipyard, once again, 6% move. It's almost at 28.38. BEML is up 10%. So defense is clearly out there. Data patterns is up about 6.5%. There was a tweet of Defense Minister Rajnath Singh. He basically talked about some numbers in terms of defense production in India in FY24, a lakh plus crores, and that being the highest ever, and how they plan to make India the global defense hub, not just for sort of captive use, but also supplying in terms of an exports opportunity. We actually had the Jefferies analyst this morning, and she was also she made a point about the export opportunity, which perhaps markets have not paid too much attention to. Just a quick word, Prakash here, out of the names that I mentioned, anything you like?
No, to be honest, they're all not just likable, they're all lovable given the business potential. But then current prices really don't leave too much of value in terms of what they need to execute now to justify these valuations. Again, as I said earlier, the sector is promising, growth is assured, but the pace of growth is something which we are kind of getting a bit ahead of ourselves in terms of anticipating. So I would wait for that to happen or the prices to soften a bit. But especially the shipyards, the Mazagon docks and the Cochin shipyards and the GRSCs of the world definitely have enough from a visibility and order book position. I would not read too much into smaller companies like MTAR or Data Patterns, which also are kind of clamoring for some sort of a re-rating. But these large companies which are asset-based, with huge entry barriers and moats, definitely makes sense. But at softer valuations.
Kind of sort of not reminds me, but sort of connecting what you said about not lovable or even likable valuations in that sense, Prakash. I don't know if you've been reading some of the notes from Kotak Equities. Sanjeev Prasad's latest note on some of the, I think it's called busting some myths. So he's kind of taken pot shots at assumptions and narratives and stories. They've been trying to do it, and I think they've got and people have, of course, I mean, because the markets kept on rallying. But I liked what someone said, Anand Sridharan of Nalanda Capital. I think he was referring to Sanjeev Prasad's latest note. He said, well, a thoughtful analyst in a thoughtless market. I don't know if you'd go that far, Prakash.
No, absolutely. I do agree. Anybody who's going to be a voice of caution in this market, the way the markets are racing ahead, would probably be proven wrong and be laughed at. But then, given a slightly longer time frame, there could be things which would reverse. And you'll probably start seeing merit in some of the caution as well, Prashant. So I believe I belong to the camp where I seek value. I'm not a very big momentum or growth player as yet. But if you were to seek value in some of the sectors and scripts, you will have to definitely wait on the sidelines because there's none that's very clearly emerging. So, some of the IPOs which have recently got listed, and mind you, they've done exceedingly well after listing. So those are areas where you could find value. But otherwise, the market definitely is a little bit over topish in terms of valuations for all the favored sectors.
The last 10% plus drawdown on the Nifty was way back in July of 2022, 2 years back. And since then, we haven't had a meaningful correction. We had a mini one on the day of the election, but that was just perhaps, a one-day flash in the pan. But let's talk about Shilpa Medicare. That's rallying as the company's CDMO customer has reported positive results from a clinical trial of a new molecule for the potential treatment of a chronic kidney disease. Vivek joins in with the details. Vivek.
Well, good afternoon. Shilpa Medicare clearly doing very well in the session today. This on the back of the fact that the company updated the exchanges last evening about one of the customers for which Shilpa Medicare provides CDMO services to. So the name of the customer is Unicyve Therapeutics, and this particular company reported positive results for a pivotal clinical trial of OLC. This particular NCE molecule, which is the new chemical entity molecule, is used in the treatment of some of the side effects that patients who are suffering from chronic kidney disease actually suffer from. So this particular entity, clearly has a significant market potential as well. What is Shilpa Medicare's role in this particular or in the value chain? Number one, they will provide the entire CDMO services. They will also be developing and supplying APIs as well as a finished dosage form. Along with that, Unicyme has already gone ahead and given Shilpa Medicare, one set of orders to provide the OLC tablets, and there is also a commitment to go ahead and buy from Shilpa another set of tablets, and this particular timeline too has been given by the company. Not only that, Shilpa Medicare will get paid for these services, but also interestingly, the company will be receiving a $10 million milestone payment, which spans over filing, approval, and launch of the product. Clearly, a positive development for Shilpa Medicare, and the stock is clearly reflecting that.
A 15% higher, so that's a big one coming through right now. We'll take a quick commercial break. Markets, by the way, have fallen again. We are down 91 points. So, at about 2:30 we were there, and there was a bit of a pullback, but we'll see. The low today is 24,170, 168 to be precise, but we're not there yet. We'll just leave you with Bajaj, which is up about 2%, so it's moved about 1% since the last time we sort of looked at it. That press conference with Rajiv Bajaj, you can see him speaking on the side box, is still very much on. And we look at Hero as well, which is, I think, recovered a little bit. It's down about 1.4% or so. So that story playing out right now. We'll take a break. We are back. Nimesh Chandan of Bajaj Finserv Asset Management will be with us on the other side. Stay tuned. Okay, welcome back. We have the market, which is selling off a little bit more, about 90 points. 24,200 is where we're at. Market breadth is still positive. 1,500 stocks are higher, and you got about 1,200 stocks which are down. And what is going up has got pretty much bulk of the volumes out there. Nimesh Chandan is with us from Bajaj Finserv Asset Management. Nimesh, good to have you with us here. I think we've had you in the studio the last couple of times, and good to chat like this as well. Just a quick word, Nimesh, on the move that we are seeing on. I know that you've had a positive view on capex and sort of infra and those kind of plays, and you think the runway for growth is long, but some of the moves here are really something astounding. Can one justify a 300% move in a stock? Whatever the news flow, whatever the positives. I'm talking about Cochin Shipyard. Just to take one example, and it's not, by the way, 300%, it's 310% now with today's gains. What's the sense, Nimesh, on two areas actually in the infra space? One is defense and the other is power. Yeah.
Always good to be on your show, Prashant. And you're right. In our indicators now, we are seeing that the overall market has moved a little above fair value. This is the large cap companies. Mid caps and small caps are about 25% to 30% now above their fair values that we calculate here at Bajaj Finserv AMC. So very little value left in the market. Most of the news or positives are discounted. While CapEx continues to be a good long-term story, there are some pockets like power, for example, is still a mega trend that we believe in. But valuations have now captured a large part of what we will see unfolding over the next few years, maybe next at least 3 to 5 years. So valuations are getting discounted, positives are getting discounted. In some sectors, like you mentioned, defense, because the number of plays that people have are very few. Typically, you see a very exaggerated move in those companies, and that's what has happened, that the valuations of those companies have moved significantly higher because people had very few stocks to invest in to play that particular theme. So we are looking at some contrarian picks, and even after the election results, we think now is the time for looking at the consumer space, looking at some of the contrarian bets, like, for example, chemicals. So we are positioning ourselves to be a little more contrarian and expecting some correction coming in the market anytime.
All right. Hi, Nimesh. Good afternoon and good to see you. Nigel on this side. I recall that call you made on chemicals, actually. And now a lot of the street is coming to terms with that maybe the second half of the year is going to be far better, both on pricing and demand. And also some of these companies have been looking at that backward integration. The benefits will start flowing through as well. What do you like from this space? And do you believe now we are towards the end of that, those EPS downgrades and things will look up?
Hi, Nigel. So you are absolutely right. We have been accumulating, or we have been positive on chemical stocks for some time in our portfolios. This market, it has a lot of investors who have very little patience. So people are not very happy when they hear that 1 quarter or 2 quarter of a long-term good business will be a little moderate or mediocre. So they are avoiding some of these companies and stocks. And for investment managers like us who have a long-term investment philosophy, these become very good picks. Chemical sector has some fantastic companies. They've got encouragement from the government in terms of PLIs to expand capacities. Globally also, they are increasing their market share. So we've seen till now some revival in volumes in some of the specialty chemicals and especially dyes and pigment chemical area. A little slow on the agri-chemical side. Second half is very critical to see whether this volume growth will turn into price growth. And then the next leg of re-rating may happen for these companies.
Right, Nimesh, got that. So that's on the chemicals front. Want to get your take on financial services, because we're in the midst of getting all of these quarterly updates, and it's quite interesting actually looking at the data and the market's reaction. I mean, I'm just giving examples. I know you can't get into individual stocks, but for instance, Bajaj Finance came out with what looked like a robust number at 30%. The market kind of took it in its stride. Today, HDFC Bank's slightly, less impressive number is seeing a very sharp reaction. Most of the banking names that at least I've seen, I mean, deposit growth is actually fairly lackluster or negative. So just on financials, because, everyone's waiting for this big move to take place on large banks, I mean, what should we be prepared for as we start looking at the quarterly numbers?
See, I would stick my neck out and say that in the BFSI space, you can find good value picks at these levels, because many say on the banking side, you are seeing many banks which can sustain their ROEs above 16% are available at a 1.5 year or 1 year forward basis of 1.8 to 2.2 times price to book. So that's an attractive valuation according to me. Cost of funds is likely to start moving down as interest rates start coming down. This will help the NBFCs also. Of course, the growth in NBFCs will depend on which segment they are present in or dominant in. So selectively, NBFCs can actually see a good growth from here and with good valuations. So it's a good time to pick in this sector. We are also bullish on the insurance side, where we believe that life insurance is now attractively placed. Even the growth in general insurance is better. For the overall credit in the market, we've seen credit growth in the banking sector coming down to about 13%. So we expect it to be around 12 to 14% for the rest of the year. Even the deposit growth would be around the same level. So that stark difference between credit growth and deposit growth may actually narrow down substantially. So this is the area where one can look for good long-term picks. And yes, some of these companies may have their own specific issues, but I don't believe that that the entire sector can be painted in one brush. But there are a lot of value picks here.
Nimesh, hi. You said you're expecting some correction in the market. You know, what is it that you anticipate? What could perhaps, you know, be the straw that breaks the camel's back? Because valuations have been high and still money is flowing in. Is it going to be some earnings disappointment, something on the global front? What's the, you know, construct, the macro construct, which could precipitate a fall?
When one tries to be a contrarian in this raging bull market, one may look stupid for some time or foolish for some time. And that's the risk we carry. Being early sometimes looks like being wrong. We value the markets on fundamentals and behavioral models. These are proprietary models we look at. You won't believe last year when we launched our funds and the market was at 20 to 21,000 range, a lot of investors told us it's an expensive market, you won't make money here. Now at 24,000, when we say we expect a correction and the markets are slightly over fair value, people again don't believe us. People feel that, okay, markets can continue to rally from here. We've seen good rally. Possibly the negative news can come from certain international pockets, maybe a sharp slowdown in the US, continued slowdown in China. There could be some disappointment at the pace at which people expect the inflation and the interest rates to come down. So those can be the triggers. Typically, when there is some slowdown in economy, global economy, you will find some earnings downgrade coming in. And in a market which is priced to perfection and expecting high earnings growth, even a small disappointment can cause a correction. I'm not bearish on the market to say we are in a bear market, but this will be a correction or an interim top in a good long-term bull market in the country.
Okay. When you say this, Nimesh, this is what, 2% away, 3% away, 5% away, or we were already there? What's the?
So it's the technical definitions of correction start from 2% to 20%, Prashant. So
No. I'm saying forget about the correction. That can be. I'm saying you said interim top. So you're saying I said this could be an interim. I'm saying is it already we already there, or you think it's some distance away even from here?
Difficult to say exact top, but Prashant, the signs are that we are around this level where we wait for some time.
You've increased your cash holding, or where is it that you've booked profits?
So we have certain funds where we work according to our view on the market. So our Balanced Advantage Fund takes a combination of fundamental and behavioral indicators and allocates money based on that. So we have reduced our net equity allocation in that fund right now. We also have a multi-asset fund where we are on the lower side of what our equity holdings would be. In some of the other funds where, say, a flexi cap or in the large and mid cap fund that we have. We don't take cash calls, but we would want to be in areas where we see less froth in terms of valuation, and we find attractive models of businesses which are going through some short-term pain. So some contrarian bets we pick up.
All right, got that, Nimish. It's been a pleasure speaking with you. Thank you so much for joining. And I think a word of caution is really warranted at times. It's good to take that on board as well in a market like this. You have a good weekend. Look forward to connecting again. Well, we do have to take a break, but as we do that, it's a very, very special day. It's a day to remember legendary Indian investor Rakesh Jhunjhunwala. It is his 64th birthday today, and the street will always remember him as the big bull, not just in the market, but the big bull on India.
So I mean, imagine, right? If he were around, he would have been on the air, thumping the table, right?
Yeah.
And it's kind of strange not having him around on big milestone days, and 21,000, 22,000, and 80,000 of the Sensex, and I think we've always had him, so that's something we miss.
And now that I look back and think, he was the one who was always thumping the table years ahead. Years before this domestic liquidity boom, this revolution that's completely changed the fabric of this market, well before it started, I think he was the original bull who believed in the story.
Absolutely, and through the depths of COVID, actually, right? I mean, he was steadfastly sort of bullish and believed in the India story more than anything else, more than stock. I mean, this stock or that stock. Believed that there is a long way to go as far as growth is concerned. We'll just play out a snippet of the conversation from one of his last interviews on his vision for India. We'll take a quick commercial break here. We'll see you on the other side.
I think India is going to enter a golden period. I see India growing at 10%. We are entering a golden age. I wish my fellow Indians were as optimistic as I am.
Welcome back. You're tuned in to Closing Bell, and we are coming to you live from the CNBC-TV18 Motilal Oswal studio. Well, for the time being, in the last 10 or 15 minutes, the Nifty has seen a big recovery. So from being down close to around 90 points, we're up 40 points. What's moved? The big boy Reliance Industries, that's come out there to bat, and that's single-handedly taken the Nifty back into the green. So the intraday chart should come off you. Big up move is what you've seen. And the tech-related names, we have the jobs report that comes out later today. And normally on tech and metals, getting into a jobs report, there is some optimism that maybe the number doesn't look so good, which means that the Fed will have to go ahead and cut rates. That's at least the optimism. And the tech index that was actually down, that's cut its losses dramatically. So Reliance Industries, tech cutting its losses, and HUL, that has a relatively larger weight on the index. And when that moves up as well, it helps the Nifty. So that's the reason why we're back in the green. But let's get in Nimish, who's back with us this week. Nimish, good to have you back. Tell us, what are you picking up in the D Street action today?
Well, Nigel, a day of consolidation, so to speak. And again, if you look at the markets today, as you rightly pointed out, a big recovery in Reliance. So while HDFC Bank is dragging, there are other large cap names like Reliance, ITC, for that matter, some bit of tech names as well.
Yeah.
They're helping the bulls to have this, so kind of Nifty is getting managed at these levels from some other large cap boys. But the good part is this whole rally of the last few days is backed by FI buying as well. So we're seeing delivery-based buying happening. That's been the case today as well. In fact, there is a basket buying in the Nifty stocks, is what I understand at the leading FI desk. So, and it's basically spread to some mid caps as well, and that explains the big outperformance in the broader market stocks today. In terms of sectors, clearly pharma stands out in terms of big moves in those sectors. Some of the select PSUs have again started doing well. Remember, there is a phase now when the energy fund from ICICI Pru is just got launched, right? So that is up for subscription till 16th. So you'll see some bit of action in the energy stocks as well, as and when that fund gets closed. So there is a bit of interest back in the PSU names, so to speak, from larger institutions. But broadly, this whole rally in the large caps is backed by FI buying as well.
Okay, all right. And what about individual stocks? Plenty of action out there. The promoters cannot sell because most of them have got into a silent period, but still
there are blocks happening.
A lot of
right?
blocks. Yeah, tell us more.
So again, a couple of stocks where there were large blocks and they're in action today. The first is BetPlus. There is a large block and the stock is under pressure after that. But I understand a leading domestic mutual fund was a seller there. So again, disclosures could be interesting. But the bigger one is HEG. Almost 5% equity has got changed hands. Well, the stock is recovered from the day's low. Need to see, in terms of disclosures, whether there is some official disclosure to that. I was just looking at the shareholding pattern. There is only one mutual fund, which is Quant, who owns a sizable stake in that particular company. So again, disclosures could be interesting there in HEG. The second stock is Suzlon. A big move in that stock and backed by large volumes as well. I understand the flows are quite strong at a leading FI desk. So looks like the FI interest is back in this particular stock. And also there is a lot of anticipation that maybe the company is likely to bag a very large order very soon. So that's Suzlon. The third stock is HOEC. Post the disclosures which came 10 days back, that stock is back in action, has recovered as well very, very sharply. I understand some leading HNI investors, quite active buyers as well, and hence a big move even in today's market. And the last is Gujarat Fluorochem. The stock has been in a consolidation phase, absolutely flat if you look at like a 3-month or a 6-month chart. But now at these levels, some bit of interest seems to be back from larger HNIs. And even there, the anticipation that maybe over the next 1 quarter or so, you will see the company raising funds in the EV business. So that's a potential trigger for Gujarat Fluoro.
Nimesh, good afternoon. Good to see you back. On Reliance, you had the opportunity to sort of make a call or two, figure out what's going on?
Not surge. Really, Prashant. So again, the fact that Reliance has actually underperformed for a longish bit. Now I think there is a bit of nifty management as well. The day when the HDFC Bank is down or some other large caps are down, Reliance puts his hands out and rallies pretty hard. There is buying interest as well, largely. And again, the telecom stocks have seen some bit of consolidation, and now maybe there is a fresh buying as well. So that explains a bit of movement in Reliance in today's market.
Okay, all right, Nimesh, thanks very much for that. So that's a quick look at things. I mean, the Reliance's 2.5% move basically means that the Nifty has also seen a vertical rally, almost coinciding with, you can pretty much put both charts together and look at the Nifty move as well, a similar kind of move. So 257 onwards, just like one-way sharp rally. There you go, on your screen. Cut losses and into green by about 40 points or so. Mitesh is with us. Mitesh, quick word on what we're seeing right now, all thanks to Reliance.
Prashant, I think, a very good setup for me on Reliance. Earlier when the breakout took place before the day of tariff hike news came in, I talked about targets of 3250, 3300 as a minimum and possibly 3500. So then the stock had a big breakout on the day of tariff hike announcement, and then last 3-4 days has been giving a consolidation kind of pullback sideways activity. I think it's picked up again. This is definitely heading towards 3300 plus levels very soon, and maybe, as I said, 3500 levels. So very, very positive over there. Use declines to buy into this one.
Thank you, Mitesh, for that. By the way, IT is also playing its part, and the run-up in IT continues. Pull up that Nifty IT one-way up move in the stock. We just want to caution the way IT has moved in the last 1 month with a rally of about 15-16%. That means there is a risk that if there is an earnings miss then it's just the negative reaction could be that much more sharper given the up move that we've seen in the run-up.
But is that even surprising, Rima? Isn't that the pattern? I think the last 3 quarters, that's the pattern. You drum it up, you run up in anticipation. And then best cases, companies say, okay, it's not getting worse. It's the same. And then you sell off.
But you know, last time there were so many earnings downgrades after the Q4 earnings because of the muted guidance. So some companies like Infy and Wipro had seen up to a 15% cut in the EPS estimates for FY25. UBS had done that analysis. So at least that this time they're saying is not going to have. Yeah, even if you don't see upgrades, at least the downgrade cycle may have come to an end and we could see a stable narrative from here. But Amrish Balika is now with us. Amrish, before we get to other stocks, first let's talk about Bayer Crop, the stock that you are tracking and you're recommending.
Yeah, Bayer, I mean, that's a subsidiary of the global agri giant. They have a range of products and services right from crop production solutions, seeds, digital farming technologies, and they also provide drone services to the farmers. Approximately 44% of the company's domestic sales comes from their top 5 products. And the focus is clearly on research and development plus collaborations with local farmers. And as far as corn seed is concerned, they are the leaders. And corn is currently being also used in ethanol production. India's average farm yield is much below global average. And globally, I think the main issue right now is food security. And that's going to be a huge issue going ahead. So the yield per acre has to go up, which again is the focus for Bayer. They have a robust balance sheet and a strong dividend payout record. I'm expecting the revenue CAGR to be about 15% for the next 3 years, the PAT CAGR of about 30% again for the next 3 years. So expecting an EPS of 275 for FY26, and my target here is going to be 8,250.
Okay, so that's Bayer Crop Sciences. Amrish, hi, good afternoon. Good to have you on as always. I just wanted to get your sense on this Raymond demerger that's underway. They'll be segregating the real estate business, and we can see the hoardings, the billboards all over Mumbai, right? Raymond Realty. What's your sense? I mean, otherwise the market has a huge appetite for all things real estate. I mean, the stock's have done really well.
Exactly.
But how would you look at this one?
I think it's already moved up. I mean, once that, those rumors were out, and then after that the news was out, I think we've already seen a huge move as far as Raymond is concerned. I mean, the last couple of months it's already doubled. So yes, I mean, because of this demerger, there can be some more upside, but at these levels, I'll not really go out and buy fresh. Maybe once the demerger is done, I mean, looking at the real estate, the stock, as and when it's listed, I'll take a fresh call. But right now at these levels, I think it's more than fully priced.
Amrish, do stay on. We need to slip into a mandatory break before we wrap up the day, the week. So stay with us. The Nifty is holding up in the green, courtesy Reliance Industries, and a sharp up move in IT stocks. Welcome back. It's not just Reliance Industries, even Jio Financial Services has seen a spike up, and the unabated, relentless rally continues in PSUs. IREDA is the last one to get to see that spike up, 4% up on that. Hudco, a stock which has moved up more than 400% in the last 1 year, has added on another 1.5%. NBCC has seen some buying in the last 30 minutes. So PSUs are very, very active. And we kept talking about how banks are struggling today, led by HDFC Bank. PSU banks are actually having a good session. The Nifty PSU banking index is up 1.5% at a time when the overall sector, the banking sector is down 1%, with Bank of Baroda up 1.5%, State Bank of India, PNB. So the entire PSU lot is actually holding up pretty okay. And even PNB's Q1 update was fairly healthy. Amrish, one stock I wanted to get your view is on Kaya. Second day in a row, locked in an upper circuit of about 10%. Yesterday, they announced that exclusive tie-up with Marico, where Marico will now distribute market Kaya. It looks like a game changer, 20% in 2 days. Where from here for Kaya?
I think because of this, possibly we could see some more upside as far as Kaya is concerned, possibly levels of about 650, 675. But I'm just wondering, I mean, this could have been done earlier. I mean, why now? But I mean, like, it's better to be late than never.
Okay, that's Kaya, 2 days of circuit on that one. Amrish, what else? I mean, we always talk to you about this whole PSU basket. It refuses to die down, the buzz over there. Even railway stocks, defense stocks, shipbuilders, you name it. Anything fresh that you are, willing to go out there and buy?
I think it's already being overdone. I mean, I'll just give you one example quickly. I mean, a stock like IRFC. I mean, I was trying to sell that very hard to investors at levels of about 25, 26. With a price target of 35, 36, maybe the maximum price target of about 40 to 45. And that stock from there, it has, run about 8 times, 9 times. And if you look at the story, nothing much has changed. I mean, like the performance is more or less similar. I mean, they are growing at that 25, 30%. I think the only thing which has changed is the story as far as the railway sector is concerned. And this is, connected to railway sector, and because of which we have seen this move. So I think most of these stocks are going up on stories as compared to the basic fundamentals at the ground level. So I think there's a lot of froth. This does not mean that one has to sell out and leave the markets, but one has to be very careful at this point of time because of the sort of froth which has built up, especially in this space.
Lots of new initiations as well. And I think Ambit yesterday initiated on a stock called TARC. It's a real estate company. I think it came out of Anantraj. And it's up 6% today. So it's not as if, the stock's not done well. It's not well. And it's doing even better now. So closed at 50 rupees, I think, last year. And at about 233. And that initiation, of course, only came in yesterday. So it's okay. I think I'm looking at okay. That is Anantraj. I'm talking about TARC. I don't think we have it in the system, but it's a small. I mean, the Ambit, of course, is pushing it as one of the top residential real estate place. That's the one. So 233 on that one. In this space, Amrish, anything at all? Real estate, not the bigger ones, but anything. There's Century Textiles. We were talking about Raymond earlier. There's this one. There is Max Estates. Anything?
Well, among the smaller ones, there is a stock which is about 1,500 crores of market cap called Arihant Superstructures, which again I've been recommending for a while. It's already become a 10-bagger in the last 4 or 5 years. But still, there's some more upside because they have about 10 to 11,000 crores of projects which should be delivered over the next 6 to 7 years. And a company which is going to deliver that much of projects over the next 6 to 7 years is available at about 1,500 crores of market cap. I think it's still decently cheap because it's still not much on the radar as far as the investors are concerned. So when in a market like this, when people look for companies, look for stocks which are under research, I think this could come on the radar.
Arihant Superstructures, got that, Amrish. I think we're almost out of time. Just 2 minutes to go before we close. Thank you so much for being with us today and taking us through all the picks. As I was just looking at the trend, this is a market that's been in an upward trend for 10 trading sessions now, with only 1 or 2 sessions where we've had a minor red close or maybe a flat close. But otherwise, this trend is now a 10-day strong trend. And not just that, the other thing to note is this week, guess which index has done the best? It's the micro-cap index. It's better than any of the others. It's even better than the PSU index or the CPSE index. So we have to watch this a little carefully because micro-caps are running, small caps are running all over again. And even today, you've got a flat close on the Nifty, a bit of a negative close on the Bank Nifty because of HDFC Bank. But the mid-cap index is shining bright with a gain of almost 0.7%. But anyway, I mean, we have to talk about large caps as well. And that last hour move, not even last hour, last I think 15-minute move by Reliance, that really takes your breath away. Almost 3% up, and that's not a small stock to be moving 3% in a matter of 10-15 minutes. That's a big mover. ONGC as well, 4.5% on the higher side. Some of the banks like SBI decided to do a flip. And SBI is going home as the third best performing stock on the Nifty. You had a couple of FMCG names like Britannia and Cipla, Britannia and HUL doing well. Cipla kind of added to it. So all in all, as we're looking at it on the gainer side, it's a very vibrant screen, Rima, very green screen when you're looking at large caps today.
Well, on the way down, it's only HDFC Bank, right, which catches your attention, down 4.5%. And now for the week, it's ending with a cut of about 2%. So all the enthusiasm related to the MSCI weight up and the fact that it's going to see passive inflows of $3-4 billion till August of 2024, all that disappeared. And HDFC Bank took a slam down 4.5%. Other than that, Titan Industries was down 2%. There was a Kotak downgrade. Some IT names like LTI, Mindtree, Infosys came in for profit booking, and even large cap private sector banks. The cuts were not deep, but ending in the red for IndusInd Bank and ICICI Bank. The bell has gone. We've wrapped up for the day. The day has been very quiet, but the mid-cap index closed up with a gain of more than 400 points at 0.7% rally. And for the week, the Nifty is up 1%, marking its fifth consecutive weekly gain, with the mid-cap index too shining bright with a 2.5% rally. We're going to wrap up in closing bell, but don't go anywhere because our very special editors roundtable comes up next.
Dr. Sanin, one of the statistics say that only 50% of Indians brush twice a day. Do you think that's simply because of a lack of awareness? Or do you think it's also a cultural issue where, one of the statistics or reports that I was reading indicated that we just don't feel the need to brush more than once a day?
It's not a question of need. It is absolutely required. It's a mandate that you should brush twice a day. In the morning to remove everything that has been lying in your mouth while you're sleeping at night, and the acidogenic bacteria that work on it and create harmful acids, etc., and to generate freshness. And in the evening, of course, to remove all food debris and material that may be going to remain in your mouth through the night. You clean it up, you rinse it, and then you go to sleep.
Okay, but what happens if you don't? If you can just explain to us what are the risks of not doing so?
So what happens is there's a buildup of what is known as a biofilm on the teeth, and the biofilm contains bacteria, especially bacteria like strep mutans, which is what causes cavities. So, and of course, gum disease has different bacteria, but there is a whole bacterial biofilm that happens in the teeth. So if you don't remove that biofilm, then the bacteria will remain there and they will act on the gums and of course on the teeth. And so the gum disease and the dental caries both will be a factor if you don't remove the biofilm. So it's extremely important, especially at night, because when you've just eaten and then you go to sleep and it has time to act.
Is it more of a rural problem? Is it also as prevalent in the urban population?
So it's, I would assume, looking at the stats, that the rural problem would be slightly more because also availability of, toothbrushes, toothpastes and other oral health aids is much less than in the urban areas. But awareness, and as Sunil said, awareness and knowledge has to be imparted so that people will be more, able to do what they have to do.
The Indian markets have not just grown, they've broken several records in the last 25 years. India's contribution to
Well, there's no stopping the bulls as Dalal Street gains for the 5th straight week, its longest winning streak since December 2023. The Sensex and the Nifty rose 1% while the mid-caps outperform. Hello and welcome to the Editor's Roundtable. Over the next 30 minutes, we decode the market action and put the spotlight on IT stocks. I'm Sonia Shenoy. With me, Nigel, Nimesh and Prashant. Also, I have Harish Bihani, who is the Senior Fund Manager at Kotak Mutual Fund, who is joining us today. Guys, what a week for the market, right? I think the cherry on the cake was India's win at the World Cup, T20 World Cup, and it was sort of poetic, right? After India won, the market continued to go up. So really, it was a day that belonged to the week that belonged to the bulls.
Yeah, absolutely. I'll share some interesting data towards the end on the World Cup wins and the market returns. So let there be a bit of a surprise towards the end. But yeah, I mean, it was a good thing that finally we won the World Cup 2020. And what a crowd yesterday, right? Yeah. I mean, the amount of people who came down to just cheer the team, it was an amazing, amazing thing to watch. So much of people coming, so much of people cheering around, and the whole team was so much excited to party and all. It was like one of those superb events to watch.
Yeah, that's right. Nimesh, I'm going to be waiting by for those data points. But the markets behaved like how the Indian bowling team was, we did perform. The spinners didn't perform, the fast bowlers performed.
Yeah.
Hardik wasn't performing. He came and bowled a splendid last over. Bumrah was very, very good.
Somebody or the
other was chipping in. It's like the bowling attack. And ultimately, we came out trumps. So, cheers to that.
And I think it's like a T20, right? I mean, every day is like a... Actually, markets are like, I mean, especially when you report on markets, every day is like a one day. But I think it's the pace is quickened, the gains have quickened, everything is happening so fast. And let me just actually put some data points out, Sonia, because today marks exactly 1 month since that election verdict, election results day, right? 4th of June was when we got the election results, and it's 1 month. And it seems like a distant memory. Because not just, I mean, the verdict itself, but also where we were in terms of levels. So the changes will come up on your screens. Nifty is up 11%, in the last 1 month. The Bank Nifty is up 12% in the last 1 month. The mid-cap index is up 16% in the last 1 month. The small-cap index is up 20%. And the micro-cap index is up 24%. So as you go down and down and down, gains keep getting bigger and bigger. I mean, from large caps, you go down to the sort of mid caps, to small caps, to micro, gains are larger. And that kind of tells you something about the kind of market that we're in. Sectorally as well, same 1 month return. This is all, by the way, not from the lows of that day when the market had that, Nifty fell 1,700 points, but from the close. CPSE index 18% in the last 1 month. That's public sector stocks. IT index 17%. Real estate went up 14%. You had oil and gas up 14%, and you had private banks which went up 13%. So this is, quite amazing to really sort of look at and behold. And what to watch out for, we know there's been earnings, and IT will be first off the block. Stocks have rallied, budget. We're still waiting for a date. Will it be the 22nd? Will it be, in that week, sometime that week, we'll get the date, date. Positioning is clearly one-sided. And I think we've been highlighting the fact that one of the data points in that sense is the FI positioning in index futures, which is now close to about 4 lakh crores or so. All of this also means that the hunt for new ideas, Nimesh, and we've spoken about this, is manic. People are acting on, just names, and the first time you hear something and next you look, the stock is up 10%, 15%. That's the kind of markets. What I just quickly did, Sonia, is looked at the new initiations in this last 1 month or so from brokers. It's actually, and it's always like that. It's not the foreign guys, but it's the local guys who are more clued in. So Goldman, I think, is the only large foreign broker who had those initiations. We discussed some of this, TBO Tech and Mapma India and Uno Minda. But look at Spark, which is South-based broker now, of course, part of Avendus. They initiated on Tips Industries. They initiated on Prudent Corporate Advisory. You look at IIFL Equities, NetWeb Technologies, J&K India, and I'm only highlighting things which are not well covered otherwise. Kotak initiated, actually, Kotak JB Chemicals, I think it's well covered, Coforge, Amara Raja, etc. BNK initiated on Archean Chemicals, Vinati Organics, Axis, TBO Tech, Novama, BKG Foods, Medi Assist, and somebody like Incred initiated on MTAR Tech. It's not an exhaustive list. I mean, there are many others as well, but I think it just shows you that people are sort of hunting for ideas. They want newer names because, what is already out there, what is already well known is kind of juiced up quite a bit.
But it's interesting you say that, because then that brings us to the next question. Is this a market that has reached a euphoric level, right? Is there any kind of froth that's building up? And let's actually pose this question to Harish Bihani. He's joining in on the show. Harish, thanks so much for joining us. It's been relentless, the rally, right? I think post-COVID, we haven't seen any major correction in this market, which also is kind of brings a little bit of caution to the table as well. Have we reached euphoric levels? Is this a time to start getting a bit cautious, or do you think the run is something that can continue?
I think a couple of points here. First is that a market is euphoric or not has to be thought through in terms of the business cycle, earnings cycle, capital cycle, and the behavioral cycle. So when you look at the business cycle, earnings cycle, and the capital cycle, it's in favor at this point in time in India. And when you look at business cycle, you look at profit to GDP, we're somewhere in the middle. We peaked somewhere in 2009, then it took 10 years for us to form a bottom, and then we started inching up from there on. So we are moving up as we speak. We are somewhere in the middle of that profit to GDP cycle. You look at the net debt to equity for corporate India, it's at a 15-year low. You look at banking balance sheet, it's extremely good at this point in time. So many factors point to a robust business cycle. We'll have to see how it shapes up over the next couple of years, but it seems very benign at this point in time. When you look at the earnings cycle, it's fairly steady. Earnings are coming through for large, mid, small cap companies, supported by the business cycle. In terms of capital cycle also, it's not that every sector, a lot of companies are chasing or there's too much competition in all these sectors. So which is also helping the earnings cycle. Lastly, the only worry that we have when we look at the markets is the behavioral cycle. You look at how market participants are behaving. That is something, and you pointed out in the initial part of this particular program, how markets have moved up over the past 1 month, 2 months, 3 months. That is something, and when you look at the IPO market, when you look at promoter selling, when you look at the private equity selling, that's something that should make one cautious. And that said, on balance, things are moving in the right direction. We'll have to move ahead, but with caution.
Harish, as even Prashant pointed out, there was a big rally in the mid-cap and the small-cap indices in the last 1 minute itself. And actually, Kotak has now resumed the subscription in the small-cap fund. What is your take overall on the small and mid-cap, and how far you see the opportunities in that particular space?
At the time of closing too, we had a dilemma in my mind because we thought through in terms of business cycle. We were fine in terms of the business cycle, but when you thought through in terms of evaluation, it was slightly on the higher side, and we thought through on the event that was about to play out. So we thought through that, why don't we take a fresh call post the event playing out? Now the event that we had all waited for has played out. It seems that we are well poised in terms of the business cycle, and that is why we reopened our fund. In aggregate, when you look at the valuations of mid-cap or a small-cap bucket, it's on the higher side. It's 20-25% higher versus previous highs. That said, we have to think through in terms of how the cycle is and how the cycle is going to behave over the next couple of years. That's one. Secondly, as I spoke about in our earlier meetings too, that when you think about India's journey from a $3.5 to $10 trillion, there'll be many small companies which will become very big in size over the next 3, 5, and 10 years. So the entire effort that we are putting in today is to identify those ideas, those themes that will become very big in size as India becomes big in size. And there are opportunities all across. Maybe we'll have to live through slightly higher valuation for that compounding, which will come over a slightly more elevated period, which is what we are telling all the investors too. That look, when you come in the market today, you will have to have a much longer time horizon versus earlier. You can't presume that the returns that you made in the past 1, 2, 3 years, you'll get similar returns in the next 6 to 12 months. Maybe you'll see a time correction, but that's a healthy correction for the market. That should happen, whether a time correction or absolute correction. It might happen at any point in time. It's very difficult to forecast. That's a healthy correction as a part of the overall cycle that we are playing in at this point in time.
Okay, all right, Harish, we'll come back to you in just a bit, but we want to talk about the IT services space, because the street is turning optimistic on IT companies, and the question is, valuations are re-rating, or business is also going to look up. Nigel, you've put together some data.
Well, that's right. Contributions coming in from Rima, obviously, that's been covering a lot on IT in the last week or so. So let me go across to the wall and, in fact, cover this space. The street is bidding up the IT space, and there is optimism building in, but are they making something out of nothing at all? Well, that's the question out there. But if you look at the stock price, you look at what the index has done in the last 1 month or so, well, clearly, the IT space, has outperformed. And that's the reason why, in fact, the street believes that maybe Q2 is going to be quite good. From Q1 onwards, we'll see a recovery. So let's run you through a few data points. First up, in the last quarter, at the end of last quarter, various brokerages went ahead and they skimmed down their estimates. And UBS, the chart should come up for you on the screen. FY25, FY26, well, they went ahead and they cut some kind of, guidance in terms of what they were estimating. But the question is, was that the end of the downgrade cycle, and will things look up from here on? The street is basically focusing on 3 parameters, and that's why there is optimism that's building in. And these are inputs coming in from Kotak. They're seeing that seasonal strength coming back in, large deals ramp up, that's possible, and also there could be a reduction in intensity of the cuts that we saw, particularly in discretionary programs, which in fact will bode well for it. So that's important as well. Brokerages, well, various came out with notes this week, and we had the big double upgrade coming in for CLSA. On Wipro, they increased their target price. They said operationally things will improve. They also hinted that there could possibly be a buyback as well. So that was on CLSA. Nomura, they turned positive on the sector on the whole. While Jefferies as well as UBS, they're being very selective. And one of the reasons for Jefferies to be selective is they are highlighting that valuations, well, they're at a premium in comparison to its 5-year average, as well as if you compare it to what the Nifty is trading at. So, Jefferies puts out that the Nifty IT index is trading at a 28% premium in comparison to what it normally trades at. Now, if you just look at the chart as well, you'll see that on a valuation basis, in comparison to its 5-year average, it's trading at a premium. But we spoke to a couple of analysts on the street, and they said that maybe this premium will not appear as much because there could be surprises on the margin front. So put all this together, the street is bracing for brighter prospects, but will it come about? Let me put a question to Harish. Harish, what's your view? The street has clearly turned very optimistic. The stock prices are telling us that. Do you concur with this optimism, or do you believe there still could be some pain in the near term?
I guess on average, things are looking slightly better for specific companies in this particular sector. And this is a very unique sector wherein people take call on how near term is going to shape up. There are companies which will report better numbers in this particular quarter, and you've seen some sharp uptick in share price for those companies, and vice versa, companies which aren't reporting or which aren't likely to report better numbers, you've seen their share price stagnate. So that's more near term. But when you think about slightly medium term, there's still this dichotomy of when the rate cuts is going to happen, Fed is going to cut their rates. Secondly, we're still unsure how US economy is going to behave given the slowdown that we are seeing at this point in time. So there are bulls and bears argument at this point in time. On balance, there are companies where growth is going to be on the higher side, which is where we are focusing on, where regardless of how macro shapes up, the overall growth will be in double digits. And that's where we are investing at this point in time.
Right. So Harish, going by what you're saying, are you tilting more towards the mid-cap names rather than the large-cap names because they could outgrow what the larger caps are doing?
Yes, we are tilting more towards the mid-cap names. We are looking at the mid-cap bucket. We are looking at niche companies, whether it's in the ER&D sector, whether it's in the pure IT services. Some of those are growing ahead of the larger cap companies, and that is where we are focusing on. In some cases, valuation have moved up very, very sharply in the past 1 month, but on average, there are still opportunities around over there.
Okay, well, let's do one thing. Let's take a quick commercial break. We continue to decode the market action and also tell you the kind of returns that markets have seen every time India has won a World Cup. That and more on the other side. Stay tuned.
Global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall. Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Welcome back to Editor's Roundtable. It's been a phenomenal run for the market in the last 1 week. In the last couple of weeks, actually, continue to sit at record highs. A lot of milestones have been scaled out, and we have Harish Bihani here with us to tell us how to approach the markets here on. Harish, one sector that has been in focus for the last many weeks is telecom. After that much-awaited tariff hike has come through from Reliance, then from Jio, then we went on to Bharti Airtel as well. And these are stocks that have given great returns to shareholders. Do you think that there's more to go in the telecom space?
Absolutely. This is a part of the repair cycle in this particular sector. The capital cycle is in favor. There are only 3 companies in the sector effectively. Second is that all companies have decided to focus on profitability, balance sheet and cash flows. And this is the beginning. So there's more to go. As you would all know that Reliance Jio should list. We don't know the timeline, but it should happen. And if that happens, then the repair of the sector, the balance sheet repair should continue. And with that, the earnings will continue to move up. Will it be similar tariff hike versus what we have seen about a week back? It seems highly likely to us. So telecom seems a fairly decent sector to invest in at this point in time.
Harish, coming back to that point on the small and mid cap, you spoke about big opportunities for some companies which can become very large. I know you can't talk stocks, but if you can just give us some idea on the sectors which you are bullish on, which are the big total addressable market where you think there could be large opportunities. Somebody was pointing to QSR as a big space. If you can just identify 2-3 sectors for us which can be really big over the next few years.
Absolutely. So first is very simple, healthcare. Whether you look at the hospital companies or diagnostic companies or domestic facing pharma companies, which are small in size, as India graduates from a $3.5 to a $10 trillion, we'll need many, many hospitals, many diagnostic companies. And the bandwidth of the existing diagnostic and hospital companies need to increase significantly. And the profit pool, if you look at the existing profit pool in these sectors, it's extremely good. And there's no reason to believe that the profit pool will come down in these segments. You spoke about QSR. In a country like India, which will become very big in size, there'll be at least 2 players which will become very big in size. You look at the entire auto ancillary space, especially the auto ancillary names in the small cap space. We have been very bullish over there across our funds. And they are behaving very similar to engineering companies now. They have diversified their product basket. They're getting into engineering areas. and we have seen significant re-rating in these names, and that should continue as we speak. You're looking at the entire capital goods names, although the valuations are elevated at this point in time, but there are niche pockets in the manufacturing capital good names that are looking good to us. You look at the entire infra basket. You have specific names in the infra basket that aren't very expensive, very, very constructive over there. So many opportunities keep emerging. We'll have to work harder, keep looking out for such opportunities in a market like these.
You know, for somebody who's watching, Harish, and wants to put money, does a small cap fund make sense, or like a multi cap or a multi asset fund make more sense? What's the recommendation?
No, it's very clear, Prashant, that we'll have to think through on the time horizon that we are investing our hard-earned money in. The longer the time horizon, you could invest in any particular pocket where volatility will be very high in the near term, but it evens out as we lengthen our time horizon. So if you take a pure equity bucket of small cap, mid cap, flexi cap, multi cap, you need to have a much longer time horizon. For something like a balanced fund, which can take calls on market, can increase the equity allocation up and down. Those are areas where you should invest in lump sum in a markets like today. So much more versus what you would do in a pure equity fund, especially in the mid and small cap bucket, where valuations have moved up higher. So that is what we have been suggesting to all our investors.
All right, Harish, request you to hold that thought. Well, Nimesh, at the start of the show, you teased us. You said there is some relation between the markets as well as cricket. We want to know what's the data you're throwing up.
Well, you know, it's a very interesting data. Even I mean, it is a kind of an eye-opener for me as well. So the first, I mean, big win was in 2007, right? The inaugural T20 World Cup, which we won. The Modi, the whole, team was so, such a first-time kind of thing, right? But if you look at the market returns after the win, I just looked at 3 months, 6 months, and 1 year period. In the first 3 months after the 2007 World Cup win, the markets were up 18 to 21%. I'm talking about Nifty and Sensex. 18 to 20% rally in the first 3 months. However, in the next 6 months, over a 6 months period from the election win, the markets were down between 7 to 9%. And over a 12-month period, the markets were down between 15 to 18%. So that was the kind of correction we saw in 27 after the World Cup win for India. Now coming to 2011, which was a 50 World Cup in Mumbai, it was something I was witness to. But look at the data after the win. Over a 3-month period, the markets were down 3.5%. Over a 6-month period, the markets were down 15%. And over a 12-month period, the markets were down 10%. So on an average, over a 6-month and a 12-month period, over the past 2 instances, we've seen between 10 to 20% kind of corrections in the market. Will history repeat? Only time will tell. But as even Prashant pointed out, we started the last 1 month, we've seen a rally between 10 to 24% across all the indices. So we've seen a long, pretty hard rally in the markets. Historically, the last two instances have suggested that over a 6-month and a 12-month period, markets, the periods are quite tough and we give negative returns. So need to see how, post the 24 win, how the next 6 to 12 months pan out for India. But history suggests that we've seen a very tough period for markets in the 6 to 12 month period after we win the World Cup, the 2020 or 50 World Cup.
On the cricket aspect, it also suggests that we'll win the 50 over World Cup in the next 4 years. So look at it positively.
Well, let's just hope this time history doesn't repeat itself, right?
So. Yeah.
But tough period can also mean consolidation. Well,
Yes.
in any case, Harish, just one final word from your end before we, end the show. This is an important month because we have the budget coming up, right? And this time around, I think the government has some flexibility because of the higher RBI dividend, because of the higher tax collections, etc. Do you think there are some stimulus measures coming, some perhaps populist measures as well? And what would all of this mean from a market standpoint?
I think that's a popular consensus, Sonia, that there will be some kind of a stimulus, and which is where you've seen rural-facing companies doing well in the past 15 days or so. That said, when you think about on average, what could be the kind of stimulus and will it have a significant impact on the overall market, it seems unlikely to us. There'll be specific companies, specific pockets that should do well. There will be on average, we think that the pace of the reforms that the government took in the past 10 years, that pace of reforms will continue. There'll be more allocation towards capex-heavy sectors. So that will continue. There might be higher allocation to the consumption basket or to certain areas where money is required at this point in time. It doesn't change in aggregate. It doesn't change the overall market environment significantly.
Okay, all right. Well, on that note, we are going to call it a wrap on this edition of Editors Roundtable. You guys have a great weekend. Of course, we're still reeling under the World Cup win, and you know that whole bonhomie continues. But stay tuned as news continues right here on CNBC TV18. Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on Dalal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter century of excellence.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV18 and CNBCTV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros, and hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. Stocks gain for the 5th straight week as the Sensex ends marginally in the red. This is the longest weekly winning streak in 7 months. Market regulator SEBI steps up vigilance. Money control reports that phones and laptops of key mutual fund executives were examined in surprise inspections. Over the past 12 months, 5 out of the top 10 mutual funds have come under the regulator's scanner. The chief economist at the IMF says the global economy is holding steady and inflation in the US is showing signs of cooling, adding that higher interest rates in the US will put pressure on other global currencies.
You campaigned for it, you fought for it, you voted for it, and now it has arrived. Change begins now.
The Labour Party registers a landslide victory in the UK general elections, wins the highest majority in close to 200 years. It's the worst poll drubbing for the Conservative Party. Former Prime Minister Liz Truss, along with a dozen ministers, lose their seats. Keir Starmer will succeed Rishi Sunak as UK's next Prime Minister. Bajaj Auto launches the world's first CNG bike called Freedom 125. The starting price will be 95,000 rupees. Rajiv Bajaj calls on the government to cut GST on CNG bikes from 28% to 12%. Mahindra Group and Volkswagen are likely to elevate their partnership to a joint venture. Sources say both companies could jointly develop and manufacture electric vehicles. That's an exclusive. GST relief for India Inc. Sources say tax authorities cannot send demand notices on interpretation and classification matters without the Finance Ministry's approval. Relief for foreign shipping companies, airlines and MNCs as well. Demand notices worth over 1 lakh crore rupees rendered null and void after the recent clarification by the GST Council. That's an exclusive. India's defence production hits a record high of 1.27 lakh crore rupees in FY24. Prime Minister Modi and Defence Minister Rajnath Singh say the Make in India push is crossing new milestones. Prime Minister Modi will visit Russia on the 8th and 9th of July. This will be his first visit since Russia's invasion of Ukraine. New dates announced for the NEET PG after it was postponed in June over allegations of irregularities. The exam will now be held on the 11th of August in 2 shifts. Well, we have a packed Friday show coming up for you, but first to the market action. The Nifty and the Sensex did see a mixed close this Friday. The Sensex closing in the red, the Nifty ending marginally in the green, but despite this, both the indices marking their 5th straight week of gains, the longest winning streak that we've seen in the last 7 months. A flat close there, 440 points lower for the Nifty Bank, 470 points higher for the mid-caps. Prashant standing by with all the market action. Prashant, closing flat for the day but strong for the week. What is the market expecting as we get ready for Monday?
It was a day spent in the red for the most part, but then something changed. And what changed was Reliance Industries. RIL surged starting about 3 p.m. and with it, it took the market up. Out of the negative territory, it was down about 70 points and up about 30-40 points. So, you know, in the green of flattish zone from being definitively down. That essentially was the story of the day. The big downward pressure, of course, came from just one stock, which is HDFC Bank, which I'll get to in just a bit. But the Nifty up on your screen, the Nifty Bank, which, of course, was still down and out thanks to, the singular effect of HDFC Bank pulling it down. Everything else in the Nifty Bank actually pulled on the upside. But, of course, it's the heavyweight with nearly a 30% weight in the Nifty Bank. That is HDFC. Mid-caps and small caps, much better. About 0.75% gain on both those indices. The large cap gains coming through, as I said, Reliance Industries, big one. ONGC did well. State Bank of India is participating. And there were some of these FMCG names, Britannia, HUL, and there was a Cipla for good measure as well, which looked good. HDFC Bank intraday tells you the story. It's given up that MSCI positive inflow that day gains, and of course then some as well. So ending almost about 4% lower by the close of it. I'll get to broader market, more advances than what was down. Lots of PSU names, RVNL, IRFC, IRCON, BEML, RailTel, Texmaco Rail. There was HBL Power, Thermax, Paytm, Shilpa Medicare. I could go on with these list of names, but you get the sense there was a large PSU day once again. And of course, a smattering of stocks from the Capex PSU power space, which continues to do very, very well and lead the markets higher with stock-specific gains. On the downside, you had names like MedPlus, Policy Bazaar, Inox Green and Orient Cement, which pulled back after seeing gains in the recent past. Back to you.
All right, Prashant, many thanks for joining us. That was the market action. And on to global macros. IMF's chief economist, Pierre Oliver, believes that the global economy is doing well and it may hold steady even if the governments change in large countries. Speaking to CNBC-TV18, he said that inflation in the U.S. is now showing signs of easing. However, he did warn that higher interest rates in the U.S. are likely to remain higher, putting pressure on other global currencies. Take a look.
There was an expectation that there would be a major slowdown, there could even be a global recession. We haven't seen any of that. Instead, what we have is inflation coming down, growth holding steady, and we are more or less on a path towards a soft landing. Some countries like the US may have a slower disinflation than maybe what they've seen last year, and therefore they might delay a little bit more their easing cycle. And as a result, interest rates in the US might remain higher for longer, and that will put pressure on other currencies.
Well, that is the chief economist of the IMF. The top global story come tomorrow. Larry, 10 Downing Street's chief Mouser, will be seeing a new resident. 61-year-old Keir Starmer, soon to be United Kingdom's next Prime Minister. This after his Labour Party secured a landslide victory in the general elections, winning over 400 seats. The Labour Party's majority, the highest in close to 200 years, has brought an end to 14 years of Conservative rule, which saw 5 Prime Ministers, including 4 just in the last 5 years. The Conservative Party has seen its worst poll drubbing. About a dozen cabinet ministers lost their seat. Liz Truss becoming the first former Prime Minister in almost 90 years to lose her seat at a general election. The Liberal Democrat, which ate into the Tory vote bank, has seen its best ever performance. Addressing a sea of red during his victory speech, Starmer reiterated his party's election tagline, "Change begins now." Starmer has vowed that there will be national renewal and that he would put country first, party second. Top world leaders, including Prime Minister Modi, taking to X to congratulate Starmer on his victory. Outgoing Prime Minister Rishi Sunak, conceding defeat, called Starmer to congratulate him on his win. Sunak emphasized that there is a goodwill on all ends and the British people have delivered a sobering verdict.
You campaigned for it, you fought for it, you voted for it, and now it has arrived. Change begins now. And it feels good, I have to be honest. 4.5 years of work changing the party. This is what it is for. A changed Labour Party, ready to serve our country, ready to restore Britain to the service of working people.
Today, power will change hands in a peaceful and orderly manner, with goodwill on all sides. That is something that should give us all confidence in our country's stability and future. The British people have delivered a sobering verdict tonight. There is much to learn and reflect on, and I take responsibility for the loss. To the many good, hard-working Conservative candidates who lost tonight, despite their tireless efforts, their local records of delivery, and their dedication to their communities, I am sorry.
We had been expecting defeat for the Conservatives in this election, then expecting crushing defeat, then a Labour landslide. What we are witnessing is really a political bloodbath where the Conservatives stand decimated politically. Labour will form government now with an overwhelming majority, with Sir Keir Starmer as the new Prime Minister of Britain. Rishi Sunak has conceded defeat. How could he not? And he's congratulated Labour on their massive win, congratulated Starmer. But Rishi Sunak is now done for. He will have to quit as leader of the Conservative Party. The Tories are very unforgiving of leaders who lead the party to defeat, and then a defeat such as this. Rishi Sunak's high-flying political career really is over. He will at best now be a backbench opposition MP. A very large number of top Conservatives have lost their seats, not forgetting the many who chose not to contest at all, seeing this coming. But over now to Starmer. Starmer has been an effective and innovative administrator with extensive experience in running institutions that Sunak did not quite have. The biggest challenge, of course, will be to steady the economy, to improve the economy, get growth. It won't be easy. Growth has been elusive. He'll have to contain inflation, manage the tax burden. The ask is huge, but the British have decided that they will now rely on Starmer and his team for the job.
Sanjay Suri reporting there from London. Moments ago, outgoing Prime Minister Rishi Sunak has given his final speech outside of 10 Downing Street. Sunak said he respects his successor Keir Starmer, calling him a decent, public-spirited man. Take a look.
Following this result, I will step down as party leader, not immediately, but once the formal arrangements for selecting my successor are in place. Sir Keir Starmer will shortly become our Prime Minister. In this job, his successes will be all our successors, and I wish him and his family well. Whatever our disagreements in this campaign, he is a decent, public-spirited man who I respect.
Well, UK has voted and the results are in, but France will head into the second round of the snap legislative polls on the 7th of July. In the first round of the elections, the National Rally Party secured 39 seats, while the New Popular Front came in second, grabbing 32 seats. However, President Macron's centrist Ensemble coalition managed to secure only 2 seats. Opinion polls suggest that the National Rally may fall short of an absolute majority. And staying with elections, Iran is gearing up for a second round of presidential elections. This after a record low turnout in the first round. So far, Sishkian has secured 42% of the votes in the first round, while Jalili has garnered 39%. Back home, Mahindra Group and Volkswagen are holding talks to elevate their partnership to a joint venture. Sources have told CNBC-TV18 that both companies could jointly develop and manufacture electric vehicles. Volkswagen was in talks with JSW Group, but sources tell us that those talks have not yielded any results. That's a CNBC-TV18 exclusive. Bajaj Auto has unveiled the world's first CNG motorcycle, Freedom 125. The new bike features both a CNG tank and a fuel tank. It has a switch that can be used to toggle between petrol and CNG, and a long seat that can accommodate more than 2 people. The ex-showroom price of the Bajaj Auto Freedom 125 starts at 95,000 rupees. This marks Bajaj Auto's 100th product launch during Rajiv Bajaj's 34-year-long career.
Customer is effectively telling us your job doesn't end with just sales and service of the product. You are responsible for the entire ecosystem, for the totality of my ownership experience. We all assure you we are with you through the life cycle of this product, through all the use cases of this product, through all the allied considerations of this product. Sir, शायद इसको हमारा बजाज की गारंटी ऐसा कह सकते हैं. If you go back and look at your data of 97-98, you will see that that is the year in which Hero Honda actually overtook Bajaj. All the Hero Honda dealers were, obviously ecstatic, and they were congratulating their chairman, Brijmohan Lalji, on this achievement. Brijmohan Lalji said to all his dealers that, look, now you have to be careful because now the tiger is wounded. This is 1997. So the message of freedom 30 years later is that tiger zinda hai.
You may think I'm sitting on any normal motorcycle, don't you? Well, this is actually the world's first CNG motorcycle by Bajaj Auto. You don't believe me, do you? Wait a second. Take a look. Here you have a CNG cylinder, and that proves my point that this is the world's first CNG motorcycle. Here you actually have a 1.8 kg cylinder fitted inside a motorcycle. This configuration took a long time. It's taken 2.5 years of hard work by the company and its R&D team to put it together. It's an absolutely new ground-up motorcycle developed from scratch, and a fuel tank and a 1.8 kg CNG cylinder right here. So that was a preview into Freedom NG04, the latest offering by Bajaj Auto. They hope this will be a big disruptor in the Indian automobile market and abroad. Let's see how the customers receive this vehicle. From Bajaj Auto's R&D and manufacturing facility here in Akudi, Pune, with video journalist Balbir, this is Parikshit Luthra.
Well, that's a first look at the new launch there from Bajaj, a world first. Onto a money control exclusive. Market regulator SEBI has knocked on the doors of a major market participant, or participants actually. Sources have told Money Control that SEBI conducted surprise inspections over the past 1 year and accessed digital devices of executives of 5 of the top 10 mutual fund houses. Money Control's Mahalakshmi joins us now with the details. Mahalakshmi, many thanks for joining us. Tell us a little bit more about these surprise inspections.
So what I'm given to understand is that over the last 12 months, 5 out of the top 10 mutual funds have been subject to surprise inspections, wherein SEBI has accessed digital devices, meaning mobile phones, iPads and laptops of top mutual fund executives. Now, these inspections are different from the search and seizure kind of operations, which are more surveillance driven. These inspections are very different. They are called internally by SEBI, they are called thematic inspections, wherein SEBI inspects records of multiple mutual funds to obtain information on various kinds of things. For example, block trades, concurrent trades, broker communications, etc. The idea is to seize data and analyze patterns to see if there are any aberrations or anything that is odd, which needs further scrutiny. This is obviously because SEBI has already automated a lot of its surveillance, and therefore routine inspections are anyway being carried on. This is just the second level of scrutiny that SEBI is now focusing on, and this of course is surprise. So that's the difference in the way these inspections are conducted.
All right, Mahalakshmi, many thanks for joining us. Vigil being stepped up there by the market regulator. Up next, GST relief for India Inc. Sources say tax authorities cannot send demand notices on interpretation and classification matters without the Finance Ministry's approval. That and more when we return. The first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive.
Telecom major Bharti Airtel is denied a breach of its security systems amidst reports of customers' data being breached. In a statement, Airtel has said that they have conducted a thorough investigation and confirmed that there has been no breach whatsoever. Unverified reports highlighted that details of 375 million Airtel customers were allegedly available on the dark web for $50,000. Cash-strapped airline SpiceJet in trouble again. Irish aircraft lessor JASL has raised concerns on the solvency of SpiceJet after the airline failed to pay its dues. JASL claims unpaid dues of 115 crore rupees, citing that the UK court order has upheld those claims. Meanwhile, SpiceJet assuring the Delhi High Court that the airline is looking to settle the dues. The court has allowed the airline 2 weeks to respond to the lessor's claims with a settlement proposal. It will hear the matter again on the 19th of July. On to a CNBC-TV18 exclusive. GST relief for India Inc. Sources tell us the tax authorities cannot send demand notices on interpretation and classification matters without the Finance Ministry's approval. Separately, sources also add the demand notices worth over 1 lakh crore rupees will be rendered null and void after the recent clarification of the GST Council. Timsy is standing by with the details. Timsy, big relief for some sectors. What are your sources telling you?
Well, that's right. In a major relief for the industry, the Directorate General of GST Intelligence has now been told that they cannot send any tax demand notices without seeking an approval from Finance Ministry. Remember, this move has been aimed towards reducing litigation and bringing ease of living, and the government has clearly said that these tax demand notices, which are actually based on interpretation or classification matters, they need a CBIC approval exactly from the policy wing of the Central Board of Indirect Taxes and Customs, and only then, once they give a go-ahead, only then is when Directorate General of GST Intelligence can send these notices to see that whether these interpretation that has been picked up by DGGI is actually correct as per the rules and the law under GST or not. So that's a major relief coming in for the industry. And apart from that, if we look at the recent changes that the GST Council in the 53rd meeting has actually given approval to, a lot of clarifications have come with respect to foreign shipping lines, foreign airlines and MNCs operating in the country when it comes to their branch office in India and head office abroad. Well, that clarity has come in, and this has now actually settled a lot of DGGI cases sent to these industries. To be precise, now DGGI notices to these sectors will be null and void with these recent notifications. Remember, foreign shipping lines were facing notices of about 1 lakh crore rupees, foreign airlines were facing about 15,000 crore rupees of DGGI notices, and MNCs were facing about 3,000 crore worth of DGGI notices. And now all these notices have been put to rest on as-is, where-is basis. So that's a big move and a big relief to bring in more ease of living, reducing litigation. That's what the government is now working on. Back to you.
All right, Timsy, many thanks. In national news, Assam continues to grapple with floods and heavy rains. The death toll in the state has now risen to 52. Officials of the Assam State Disaster Management have said that water levels of the Brahmaputra dipping marginally, but the flood situation continues to be grim. Preeti Priyadarshini with this ground report.
Currently, we are in Guimara in Polashbari, and I am trying to show you the ground situation in Assam due to Assam floods. This is the second wave of flood in Assam, and almost 21 lakh people have been affected. You see the condition of the people, and they are trying to survive like this. They are crossing the roads, they are making their living by shifting to the embankments because of this extremely devastating floods in Assam, which has now taken lives of 52 people. I have a few villagers with me here in Guimara, and this place is devastated completely by the flood water. I would like to talk to you. आप लोग इतना ये बाढ़ के पानी में आप लोग आ जा रहे हैं, कितना नुकसान हुआ है, आप कहाँ रहते हैं?
अब तो बहुत खेती बाड़ी और वो गाय को घास मिलता नहीं है, बकरी का खाना पीना नहीं है, वो आदमी वाला को पानी पिया नहीं है,
पानी भी नहीं है,
पूरा पाइप डूब गया।
और इस साल ज्यादा हुआ है क्या? फ्लड मैंने देखा है कि सारी जगहों पे
कितने दिन में पूरा ज्यादा हुआ, आगे वाला पानी तो पूरा कमती हुआ।
अभी जो बारिश हो रहा है इसके लिए आप लोगों का यहाँ पे फ्लड ज्यादा हो रहा है। अभी भी देख रहे हैं कि बारिश हो रहा है। आप लोग यहाँ पे देख रहे हैं कि रिलीफ कैंप्स में हैं। सारे लोग अभी रिलीफ कैंप में हैं।
पूरा हमारे पूरा गांव वाला रिलीफ कैंप में है।
Well, the situation grim in Assam. The Delhi High Court has sought the CBI stand on the bail plea of Delhi Chief Minister Arvind Kejriwal while agreeing to hear the plea. However, the court also took notice of the CBI's objection that Kejriwal did not move the trial court first. The court told Kejriwal's legal team not to clog the Superior Court, where there is a remedy available at a lower court. The High Court will hear the matter on the 17th of July. Prime Minister Modi will visit Russia on the 8th and 9th of July. This will be his first visit since Russia's invasion of Ukraine. The National Test Agency has announced fresh dates for the NEET PG. The exam will now be held on the 11th of August in 2 shifts. Remember, the exam was first scheduled to be held on the 23rd of June. However, it was postponed as a precautionary measure following allegations of irregularities in the NEET UG. Well, with that, it is time for us to wrap up this edition of Business 360. Don't go anywhere. We've got a CNBC TV18 exclusive coming up right after this short break. Stay tuned.
Decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.